What does that mean? We were helping businesses that were during the pandemic try to grow with lower credit scores. So minimum FICO scores for business lending is 680 and above. Through this program, it was 617. Okay? Now, new administration came in, right? Changes with diversity, equity, inclusion, things of that sort. So we ended that program May of this year. Now, the banks decide, hey, how do we continue to support the businesses in communities that are either low to moderate income, middle income communities, communities of color, rural areas, etc. So we launched in June what's called a neighborhood lending program. All that means is as long as you live in a majority minority census tract, or your business is in a majority minority census tract, you will automatically qualify for a 0.5% discount, automatically. No question asked. Okay? In addition to that, you set up your relationship with us as well, and then automatic payments, you get another 4% on your loan. So think about it, you have access to up to 3/4 of interest rate to low prime, right? As long as you bank with us and have this loan with us. So I see clients that are already low prime. So prime, who knows what prime is right now? Guess what prime rate is? 6.75 is prime rate right now. That's the Wall Street Journal prime, right? Right, program, if you qualify, you can go below prime. So I actually find that 6% rates on the business loan. So it's kind of gives you that flexibility now, and still have access to capital when you need it. The other thing I'll say is as part of my program, it's a 3-pillar program. That first pillar is access to capital, right? Talked about it already. It's a lending program. Our second pillar is access to education. And you'll see Willow when he presents a banking basis about what we do in the communities that we serve. So our that second pillar of access to education is providing financial literacy, whether that's consumer or small business focus, right? So whatever you're interested in learning about, you can do that. And it's free of charge. You don't even have to bank with us. If you want us to come to your communities, teach financial literacy, we'll provide you that. Okay? And then finally, the third pillar of my program is access to partnerships. So what that means is, let's say you come to the bank. You want to apply for a business loan, you want to apply for a consumer loan, whatever it may be. If you cannot qualify with us, our intention doesn't have to walk out the door without a solution. So we say, hey, how do we provide resources to the community that can't qualify just yet with the bank, right? So we partner with 52 nonprofit organizations supporting consumers and small businesses. And we actually have someone here that's actually working with Jose. He's working, right? He couldn't qualify for the bank. I'm trying to get him on the spot, but I want to make sure people help. For whatever reason, he didn't get qualified to us, but we connected him with one of our nonprofit partners that provides lending to small businesses, right? Their requirements are a lot different. And so we wanted to make sure that we're intentional. Hey, of course, we can't help you today, but let me give you the solution to make it help you. Right? So we can help startups, we can help seasoned businesses through these programs. And a lot of the partners that we work with can go all the way up to $250,000 in lending for your small business. Even if you've only been operational for at least 3 months. Been operational for 3 months, you can get your financing through one of our nonprofit partners. Okay. Any questions for me before I turn it over to oh yes, it's working.
No.
Oh, no. Okay. Yes.
What does BMO stand for?
Oh, great question. So I forgot that part. So BMO is Bank of Montreal. So Bank of Montreal has been a bank for over 200 years. It started out in Canada, hence Montreal. Then they started purchasing smaller banks in the United States. The first big acquisition was in the 1960s, Harris Bank out of Chicago. So we purchased Harris Bank out of Chicago, and then kind of made a splash in that area. And then the second biggest purchase is now Bank of the West. So now we're in 32 states, and we're the 7th largest bank in North America. So we are definitely trying to compete with the Wells Fargo, the Bank of America, the Chase of the world, right? The difference between us is we still have this community focused mindset, the Bank of the West, that you're going to see us at all, at events. Tony can attest to this. What I like to do for small businesses is, if there's a community that wants to showcase their business, they can come out and host an event with us. And Tony was with us at our conference range, where we had small businesses come out, showcase their business, free of charge. You have to pay for permits, you have to pay for the booth, just come out and showcase your business. So that's kind of one of the things I like to do, right? Wherever we're located, especially now coming to Long Beach, we want to make sure that people have access to us and provide those resources that you guys need. So it's kind of what back of my house and, what we're looking to do. Yes.
Okay, no quick question.
Yeah.
You said that the new branch that's opening up is on Willow?
It's on, no, Willow's Branch manager, it's the longest exchange, yeah, it's the longest exchange was given.
It's 5 minutes from the LBX airport, and it's the intersection of Lakewood Boulevard with Carson, right after the Long Beach Community College. And you all will be invited to the grand opening, because we're being here. So it's gonna be fun. It's gonna be fun.
Yeah, definitely. And I saw a hand in the back. You have a question back there? Yes.
Hi, good morning.
Morning.
And I'm Dina. So just a quick answer. So as far as home loans, non-first time home buyers, what is you all's
Yeah, no,
vision on that?
great question. So I'm glad that you brought that up. We actually have what's called our home loan program.
Okay,
To your point, for a bank, you're considered a first-time home buyer.
if you're not,
Okay, if you're not a first-time home buyer, for 5 years in your current residence.
okay,
And if you're gonna purchase a second property, you have to deliver our program.
but you offer current homeowners that are not first time home buyers.
Yes. To purchase instant property.
Borrow.
Yes, correct. And you still qualify for our first-time home buyer program if you live in your property for more than 5 years, your first property, right?
Okay, yes.
Yeah.
And then that would be-
Yes. So
Okay.
you can qualify for that. So what we have is what's called a home loan buying program, which is up to $40,000 already with people. Okay? And then we also work with certified agencies like Operation Hope and whatnot. You get your hook certificate, and then based on when you're buying this property, you can qualify for additional EPA programs. So down payment assistance programs. The only requirement is that you complete an 8-hour course and get that certificate. Once you look into buy that property, come in BMO, we analyze what the property is. Again, it's in the majority minority census tract, which is pretty much everywhere in Southern California, will qualify for our down payment assistance programs. So you not only get the benefit of the grant from BMO, but now you get the benefit of other down payment assistance programs in your city, right? So depending on where you're buying, you have a back end team that analyzes what's available there. So I'll give you an example. So the WISH program, right, for teachers, WISH program. Yeah, that's a teacher program. So we ended up helping a teacher buy her first property in Garden Grove, and she ended up getting $123,000 worth of down payment assistance program. And she used it however she wanted. Closing costs, interest rate reductions, etc. That kind of gives you a scope of how it's important to the community, right? Because at the end of the day, it is about generational wealth. We want to make sure that we leave legacies to our families, right? And so we're really trying to push that message. That it's community focused and providing that outlet. I know that was a long answer, but
Oh, no.
yes.
No.
We will.
Yes, I just need to find a buy for mine.
Yeah.
So I can buy, okay. Okay,
Yes.
thanks, Mary.
But your program sounds wonderful, so you're saying if they own a home and own it for 5 years, there's a $40,000 down payment?
Yes. Still qualify. So to your point, right? So depending on what city you're buying in, which program might not work for some people, but it might work for others. So that team analyzes all the down payment assistance programs in the community. It says, hey, you qualify for this program, that program, you don't qualify for this program, right? So it's nothing you have to worry about. We'll do all the work on the back end, and then the mortgage bank will communicate that with you. Say, hey, by the way, you qualify for our program, but now we also run additional programs that you can use. So it's not a one size fits all, right? It's a case by case scenario of what programs make sense for you. Yes. Answer, please. What's the question? I just saw on Thursday, roughly 5.5 to like 6.5%. FHA is a little high. Yeah, the reason why FHA is high is because of the lower down payment, right? 3% down payment. So it's just something to be that high. Yeah. Any other questions? Yes.
What's the probability you have a Unilano for more interest, even if you have a credit?
So with the nonprofits that we work with, I have one that's called PNC, Community Capital, and they help small businesses, and they don't analyze their FICO score. So no FICO score minimum. So we do have those outlets. So yeah, if you want to learn more, feel free to talk to the guys, and they'll connect you with me, and then they can support.
Does BMO offer grants or sponsorships to nonprofits?
We do, and our sponsorship opens up March and October. So if you're interested, talk to the guys that are actually not potentially, what that possible is. Awesome. Yes. My contact information? I don't know if I have cards. I can give you my email address. You guys ready?
We have business cards.
Oh, you guys have your business cards, right?
Here's my email over. Daniel.
No, I oversee the whole Southern California, so yeah, I have a house in downtown, and then these guys work along. So it's Daniel, DANIEL, dot, Rodriguez, RODRIGUEZ, Morales, MORALES, at BMO.com. I know it's long, at BMO.com, BMO.com. Sorry for not email. I used to put my last name. Oh, yeah. We got you.
Sorry, can you repeat the last part? Is it me?
Yeah, BMO.com. Sorry, my writing's a little funny, so.
Nobody's gonna see that.
No?
You know, you got a whole board, it's the whole thing.
Yeah. Is that better?
Yeah, must have seen it back.
Sorry, I write a little funny, so that's why I'm not gonna fit.
I was trying to figure out which letter you're missing. I think you're missing a Q.
Am I?
No, I mean, you're using all the other letters of the alphabet.
All right, yeah. I can that's the way I write it. Lowercase is the best way. I do sometimes. All right, so with that, I'll turn it back over to Tony.
So you like, did you already take care of everything?
Yeah, I got everything in the window.
Is Will coming up?
Yeah. You want to just talk to your presentation?
Yeah, I can talk about it.
Yes.
October 5th. Right now, we do have another option.
That's the exchange?
Yes. October 5th. Yeah, we have another one. Yeah, down the street, but what I want you to do is I want to talk to these guys, next to these guys. You know, I think it's definitely an opportunity for you to meet them when they're fresh, right? And one of the things I also thought, and I don't know if Tony might cover this, not I guess that's got something else to talk about, but let's go to, is everybody familiar with the 5 C's of credit? The 5 C's of credit. So the first C is character, right? That's how you make it credit. Second C is collateral, what you have in place to support the land enterprise. Capacity is the third C. You have the capacity to pay back the loan. So character, collateral, capacity. Which one am I missing, guys? I can't think of the top of my head right now. Collateral, capacity, condition is the fourth one. And condition just means where you're located, what political landscape is affecting your business. And then the fifth C.
Capital.
Capital. How much skin in the game you got, right? And when we say how much skin in the game you do have is how much have you invested in your own personal mortgage or your business, right? Skin in the game. The bank wants to know how much skin in the game you have. How can are you building your legacy for your family? And then real quick, I've always added 6 C's to this formula. It's called communication. be open to communicate with your bankers. If we don't know what you need, how can we support you, right? Because I think a lot of the times now, when we think about a bank, it's very transactional. You come in, you make a withdrawal, you make a deposit, you pay ATM, and that's it. We have no communication with you guys, right? So I always ask that 6 communicate with them. Come in, talk to the bank, talk to the manager, say, hey, I'm thinking about buying a property, or I'm helping my son go to college. These guys can be recommended to other people in the industry that can support them. Right? Maybe it's a 5-9 plan. You want to set up a 5-9 plan for your kids' college, right? So what you think of that sort of, those guys are going to be the guys that come communicate with them. Yes?
What was the first seat?
Carrot. Now I remember now. So first seat, character, second seat, capital, third seat, capacity, fourth seat, collateral, fifth seat, conditions. And then the sixth one, I added communication, just real quick. Talk to your bankers. Our recommendation that I would make too is talk to the branch manager. You got one right here, hello, talk to him. You can help support, you personally and your business. Yes.
So I know like most banks, they sell foreclosed houses. Do you guys have one?
No, we're not. Yeah, we're not in that space. I remember who you're referring to. Because I had that with Bank of America. We kind of shifted away from that. Most banks are not no longer selling distressed properties. All right. That's all I have, guys. I'll turn it over. So if these guys don't treat you well, you call me. Hopefully that's clear. And also, we're also sponsor of the NAACP Long Beach branch.
I wanted to say that. Why you gotta steal my thunder, bro?
Go ahead, tell me. You tell them.
Yeah, say it again.
What happened was, no. Go ahead, sell.
No, go ahead.
So again, I am the interim treasurer for the NAACP Long Beach. Just a word that along with it, thank you very much. And one of my first act as interim treasurer was to go out and beg for some money. This is why we would tell the story. And Daniel couldn't wait to go ahead. He went straight to his wallet and gave me $10. No, I'm just kidding. You want to tell them how much you did?
Yeah, so we're sponsoring the gala with a $10,000 sponsor.
The reason why this is important is because a lot of challenged families have a difficult time being able to send their children to school. So the NAACP takes part in offering scholarship programs for young scholars who might be financially challenged. So that $10,000 donation from BMO gives us the opportunity to share more opportunities for our young people. So with that, I definitely want to give a round of applause.
So now, as I mentioned, right, one of the pillars of my program is access to education. So today we have below, we're going to be presenting on banking basics. I think it's important, to have, basically a bank account, right? A lot of times in the black and brown communities, we don't trust banks, right? And then what I've noticed is I want to get people away from the UTM to the ATM. You guys know what UTM means? Under the mattress money. Okay, so get away from UTM, let's take that money to the ATM, help you build a legacy for your family and get access to credit. So with that, I'll turn it over to Willow. He's going to talk to you about banking basics and the different solutions, right, that are available for you. This presentation is not intended to be focused on BMO. That's not how we do financial literacy. This financial literacy program is focused around everything holistically, right? One of the things that I'm happy about this program is, yes, we're a bank, we're not company, but we're not selling anything today. We just want to give you education so you understand it's available for you, whether you go to BMO or another bank. It's just education. Thank you guys. I'll turn it over to Will.
feel free to interrupt me at any time. So one of the things that I'm going to start explaining is the difference between financial institutions. Do you know that there is in the market, sometimes people consider banks, there is banks and credit unions. Do you know what's the main difference between a bank and a credit union? So the main difference is banks are for-profit business that have missions. Sometimes, like for example, BMO, that is to help the community, because BMO believes that if the community grows, we all grow, right? And this is kind of the spirit I always feel here in Long Beach. We are a community where you can feel how we care for each other, right? And that's basically how banks try to approach into the community. At the same time, there is another group of financial institutions that are the credit unions. I mean, different with the bank is the credit union is a non-profit organization that it belongs to the members. The members are the clients most of the time of these institutions. So that is the main differentiator on how they are organized. When you save in these entities, be aware that both are insured by the government. It's called FDIC insured. And either a credit union or a bank, the government back up your savings. I remember in 2007, I was living at that time in Atlanta when it was the crisis. And you start seeing in the news, bank, ABC, out of business. Bank, yellow bank, out of business, right? The system and the government is for that strong that in 2-3 days, they work with another bank that didn't went out of business. But we start paying all your money back. Let's say that you open your account in this bank, CWI. What happens is they close on a Friday. By Wednesday, we were paying back people the money with a certified check from the bank. So what I'm trying to tell you with this is, there is no reason not to trust your credit union or your bank because your funds are secure. I mean, it covers you per account, per person, 250,000. So if it's you and your wife, and you have one checking account, how much you are covered? Any idea? $500 is 250 for each person, right? And what happens if you also have, let's say, a checking and a saving? And if it's you and your wife in each account, now you're protected by 4, 250 by 4. So most of the time, we regular people, and we should have more like that, but we regular people, all our assets, our accounts are protected. Right? So that's why you are reassured that the banks are institutions for you to trust. No, it's not on the presentation, but I want to share this with you because I always listen this coming out of the street, comments, urban legends. Oh, I don't put money on my account because the IRS is going to get me, or the government is going to trace me, right? That's not true. Banks and credit unions have an ecosystem that is closed, right? They don't share, I mean, financial institutions, we don't go running to IRS, provide information is if you do something really huge that a legal court, the judge, requests a specific information. You know what? I think Ryan, you've been doing crazy things. So, Mr. Bank, for the security of the country, we need information on what Ryan is doing. That's the only case that you'll be aware of that. Other than that, it's fair to have your funds, your transactions. What usually happens is businesses or we as individuals, we tend not to use the banking system under those beliefs. What happens is when you go and you want to purchase your house, you have no storage. And you cannot go, even if you have, oh no, but I have all this money, it's in my, I don't know, under my mattress or under my song or whatever, the funds are placed, you cannot prove that you have savings. And then it makes it a little bit complicated if you want to purchase a house. Another thing that is very important under this subject is if you have a business, has a strategy on whoever does your taxes or yourself. Right now with AI, with technology, most of us or most of the people is able to complete taxes. What I'm going with this is show also that you have income. Again, we were talking about how to build wealth. So if you want to take advantage and get a property, so you're building wealth, you have to show on your taxes that you have some income. In that way, you will get approved for, we were talking about mortgage rates, you will get approved for this, but also you will get approved with good conditions, good rates. That's the importance of having deposits and having income. Those are strong requirements when you want to grow. So you know, for example, I tell younger generation is how much you guys can tell it can cost 1 unit, 2 unit apartment in London. For someone who's pretty young, maybe few years after college, that I always tell them, hey, Mr. Customer, this is a perfect age, you're working already, to take advantage of getting a property. Oh no, but how am I going to do that? I'm not going to qualify. Yes, you will. You pay rent already. So that's something that you can present. Oh, but I don't have money for the down payment. Let me tell you. Several financial institutions, including BMO, based on different circumstances, we have grants, money that we would give away. As a matter of fact, until a few months ago, we were giving 47,000 combining programs as a down payment assistance. 47,000 for an apartment of 400,000 is more than 10%. So, more you get, this person will get the support that needs to purchase the first apartment. Oh, but I'm too small, I'm not living there. Okay. Find solutions to maybe you continue living with your parents, but you can rent your apartment, someone you trust. I mean, there's different ways to finance.
Okay, let's put on my
And trust me, if you start younger, by the time you're 50, 55, I'm giving the example of a young person who they truly believe, oh, I cannot afford to do it. By the time you're 50, 60, you're going to retire, you're ready to have a
And
property.
the other thing is, I need to
Probably that apartment
make it so
will be
it
worth
doesn't turn off,
hopefully more
so it
than
doesn't.
$100,000. Now you have wealth. this is where I'm coming from with basic
Well, let's connect it to
compound.
the Wi-Fi.
That's the reason why you have a checking account. That's the reason why you have a savings account. That's the reason why if you work for a company, that's where you will show income. But if you are independent, this is what you have to do to be able to qualify to build wealth. Any questions so far? Have you heard this legend of I don't do this with the government? Go ahead.
Do you buy, loan mortgages?
I'm sorry, do you buy
Mortgages, loan.
like refi? Yes, we do. We do run refis of mortgages for different reasons. Sometimes to lower the interest, or sometimes
Let me
to
do
get
this.
your equity of the house to work for you.
Power and
What is an equity? I know a lot of people who come to the bank with, hey, I want to purchase this restaurant because it's a really good business, and I'm sure with my talent and superpower, I'm gonna make it even better.
Tony,
But I
we're
don't
gonna
have the money to purchase that
she said
business.
it's presentation
The
tomorrow,
ultimate
so we're gonna
seller
open it up on the laptop since that works on the TV.
It works on TV.
Yeah.
This
So send it to
person
him tomorrow.
owns a
Yeah,
property.
we got that.
And because he's been working hard, and this person purchased the property probably 10 years ago,
For exclamation point.
he owns to the bank, let's call it $400,000. Right? But the property now, the value grows, and the property, let's say, is worth $700,000. $700,000 a week.
Probably I typed it in there.
So there is a difference that you don't owe to the bank of $300,000. Because if you sell your house to the value of the market, $700,000, okay? When the transaction happens, they got a check to the bank, and guess what? You give $300,000 that you can invest to purchase that business. Now, that's the reason why people go to the bank to get a refi mortgage, because you don't have to sell your house to get 100,000. You can ask the
Actually, can I try
bank,
the other one,
hey,
the lounge one?
I
I
have
think the top one was
300,000 already done,
child care.
and the bank will lend you against that as a collateral. That's how people make dreams come true, right? By using, having capital, having your house.
Kill everything.
All these things together, you have to have training.
Didn't go as fast as we
And that's why you have your checking account, your savings account.
This is live.
And then you got it. There is CDs who pay you higher interest. There is money market accounts that pay you higher interest and give you access to the fund. So that's the overall idea of using the bank as a tracing piece for the time when you find that opportunity, you can raise your hand and have a plan in life. Because, let's be honest, we are not gonna work all of our life, right? And now, I just gave you that example because of timing. I gave you that example, but there is different scenarios to do this. Doesn't matter where you are on life, your age, if you work for a company or you are independent, we can build a plan together to make it happen, right? But does anyone have a question or an idea of how to start building wealth doing this strategy? Because we pay rent anyway, right? That's the easiest way to start building property. Getting people out of poverty is to help them to purchase a real estate. Questions, ideas? The bank doesn't do reverse mortgage, But like Daniel was saying earlier, we partner with different people and we together can create a strategy. Banks are, let's call it different banks, we're friends, right? We are not, I'm pretty wrong that you know. And what we do is we have connections that, you know what, hey, I don't do reverse mortgage, but I have this scenario, I'm helping my customer, let's find something. So go to your bank, go to your credit union, go to BMO and ask, hey, this is what I want to do. You will find the connections that you need to make it happen. Or maybe they give you a better idea, right? But yes, if you have a strategy requesting to use your property under reverse mortgage, we can make it happen. Yes, we go to collect your information and we follow up.
Yeah, just so you're aware, our third-party reverse mortgage bank is it's called Home Equity Bank. Home Equity Bank, yeah. Home Equity Bank. Yeah, yeah. So they're like a third-party provider. We won't do it directly. And I'll just give you guys some background. So a lot of the main financial institutions don't do reverse mortgages because it poses a lot of risk on our side when we're lending money out, right? So that's why we partner with these third-party smaller banks that actually specialize in specifically reverse mortgage. So for us, it's Home Equity Bank. But yeah, if you want more information, connect with these guys, and then yeah.
Everyone towards the event, we're gonna have a QR code where you can just put your information and we'll follow up next week. How long? Like 5 minutes? So I want to give you advantage of these 5 minutes where we're going to spend this presentation will share it with Tony for distribution. But what other questions do you have? Go ahead. Same scenario, we do it with a partner bank, with different programs, and actually as a matter of fact, I'm very familiar with, I have to pay my student loan, and there is a new program, we will connect you to work with that. Yes. So, she was asking if we can support or help with the student loan, right? So that's, for example, go ahead. We don't refer you to the IRS.
So then they take that into account, and it's like, it's not like you don't want to build their money, but it's like, there's like, walk in with that account. And it's out there, that will have to like change your mindset and like realizing that's a bigger like profit benefit when you're stuck in spending stuff.
The question is about how, for example, when you go to Medicare or any subsidized program, they ask you about your bank records, right? I mean, I cannot tell you how to bypass those things, right? But it's about the strategy. It's about the strategy. Go to your bank, your credit union, does that. Because yes, I know if you go to, let's call it, and they ask you, hey, where's your account? And then you show up next day with your statement and you have $1 million in your statement or your checking, and 2 million in your savings, they're gonna say, come on, bro, you don't need to get the program, you have a lot of money, right? So that's like a one-on-one game where what you do is whether that your taxes, your finances, and you can start with the bank, helps you to do a strategy to be able to achieve what is your financial goal. Any other questions? For example, someone wants to purchase a business, to open a business. I mean, here in California, we are people who, we always doing business, where that's one of the reasons that this economy grows a lot. Do you have questions about it? About doing a business, opening a business? Let me tell you something. Usually when you go to banks, it happens to, for example, my mom. My mom is from Argentina, and she is the queen of the empanadas. And she wants to do empanadas, and she wants to sell empanadas, because, oh, I don't want to stay home, I need to do something. So she asked me, hey, Tom, I heard that you always giving loans to businesses, right? But I went to your bank, I didn't want to bother you, Tom, but I went to your banks to BMO, and they told me that you have to be 2 years on business. But that's impossible because they need to buy, like, let's call it empanada truck instead of a taco truck. And my mom is, I don't have 2 years in business, right? And I went to another bank because I was disappointed, so I'm sorry, I want to go to a competitor, but I went to bank B and C, and they told me the same. And that's what we talked earlier, that banks were friends, because we work with another institution, and guess what? If you have a dream to do a business, you're just opening the business with few conditions, we have partners that will make it happen. If you have some sort of, okay, I work in McDonald's, that's my salary, so I can afford to pay for the loan to purchase the taco truck, another truck for my mom, we can make it happen. No, I mean, you don't have to have perfect credit, you just have to show the ability to pay back, and that your project of selling empanadas is good. So, think this way. Your bank, your credit union, those, we are your partners to you to achieve financial success. Go, ask questions, and if you want, again, at the end of the day, or during the presentation, we are going to have QR code where you put your information, we'll call you back. We're going to help you to make your dreams come true. Thank you for the opportunity.
You had a chance to have a real conversation with yourself. Okay, great? And that's really why I want to bring up. So, let's go ahead and say that over here. Okay, so the one thing about being in the Air Force is I always learn to have a backup plan, right? So my backup plan probably got something to do with me being a nerd too. Is everything we're talking about is in the school today. So I'm not going to hand it out until later. So my turn was coming up, it makes me look like a star. Anyway, but looks like we're going to probably have handouts out. We got some handouts for the presentation. You should share with the rest of the table. But if this doesn't work out, I still want to be able to have this information shared with you. So do me a favor, take 5, go run to the bathroom, grab a little snack, whatever you want. We're going to come back here at exactly 11:07. Thank you. Hello, everybody. We'll be back in a few minutes. Bye, everybody. It's 3 people. Hey, something.
Yes. I'm in.
I can't find the name on LinkedIn, man.
Porque en LinkedIn no uso los dos apellidos. Search. Boom.
Aquí es
Yeah.
te voy a mandar en carta para so you can be in,
Yeah.
you know, I run for the businesses,
Okay.
real estate development, Richmond, and Richmond.
Yeah. Okay.
We just moved to $330,000 PPP.
Yeah, yeah.
We got the customer endorsement and CWI. Pero back to the deal.
Yeah.
So maybe find out the partner or sell, man.
Yeah.
And, but I'll see.
Yeah, definitely. Sí, sí. Okay. Definitely.
Andrés.
Andrés, Daniel, mucho gusto. Oh, the fighting? Yeah. Yes, character, communication, when I just printed, capacity. Yeah, so condition is more so like, hey, what geographical area are you starting your business in? Are the tariffs affecting your business? That's what conditions for. Like political landscape, geography, where you're located. Yeah. Yeah, whatever we can do to help. We got these guys here.
I just love this show.
Yeah. Ah, okay. Yeah. It was tough. Yeah, it was tough in the beginning. That's what happened. Which branch did you go to? The one in Long Beach, right? Not McNeed. That one's. Yes, okay. Okay.
That's how I have all that stuff.
Yeah. Ah, okay. Okay. You have a card? No? Okay. Oh, okay. Yeah. So BMP Caribas used to. Oh, okay. So when BNP Paribas owned Bank of the West, and then so BNP Paribas sold it to BMO in Canada. That's why. Yes. Out of Chicago. Out of Chicago, Illinois. That's the U.S. That's the U.S. headquarters. Yeah. Yeah. Yeah, let me know. Did you get my email phone number or no? Okay, just email me. Whatever I can do to help. Oh. Thank you. What's your name? Yeah. Oh, okay, nice. Thank you. Oh, sorry, I didn't. Oh, sorry. He's recording. So, directly with BMO, it's called a first-time home buyer loan program. So you get up to $47,000. Great, directly with us. But if you want additional down payment assistance, you have to go to the HUD certification class, which is free. I've taken a loan. Are you on? I've taken a loan to work with Operation Help. Usually, other organizations are charged for the certification class. But Operation Help offers it for free. Yeah. But yeah, if you want to find out more about our loan program, talk to this guy. I might be in Fresno one day and San Diego the next day. So these will be the local guys. They'll loop me in and let me know. So just make sure, did you get one of the cards? Okay, cool. Yeah, he's the branch manager. So we have one. We have one about, I want to say 5 minutes from there. And then the new one is going to be off of, I think that's the same. Yeah. That's the old one, but the new one's going to be on the other Oh, really?
I've been there before, and then was before the
Alright, cool, awesome.
Send me an email on that for today, and then I'll send it to our facilities manager.
started previously. Renee, you gotta release some people back there. All right, if we get started, you go ahead and get this microphone right there. Everybody hear me okay?
Yep. Yes.
All right, so again, we still haven't faced the technical difficulties, but by now you should have some printed presentations on the presentation table. Is anybody listening to the presentation right now? Does everyone have a list copy? Not individually, but looking for your own table. So does everyone have a copy of the presentation? No, that's not the presentation. There should be a bunch of printouts. Okay, we got one more printout. Two more printouts. Three more printouts. Okay. Okay, we'll have to do some more printouts. So, no, that's the survey. It should be a stack of printed materials like this. No, that's fine. Does everybody have this on your table right now? Yes. No? Okay, we got this one down. We're going to try to make it work. The good news is, a lot of things that we're talking about is actually in that book that you're going to get in. You have it already done? All right, so let's make sure we will get everybody's books. So, Shel, what's your name? You're here. No, you're not here. What's your name? You get a car. You get a car. Okay, what's your name? Virginia, you got all yours. You got yours. What's your name? Jose? You know what? I think it's enough just to give them out. So, if your name is not on this book, I don't care. Let's go ahead and just get them out so we can get this moving. All right. You don't have one of these? There you go. We're gonna make it work. We gonna make it work. You have a book? You're gonna have a book. You got a book? You got a book? Everybody have a book now? Okay, so everybody has a book now? All right, so let's go ahead and continue. We're just slightly behind, about 12 minutes, so we don't catch up. So real quick, I want to be able to introduce especially young person that's going to come out this morning to talk about credit and debt management. So while Daniel and Wilo was up there, they got a chance to talk about, and they put this TV in front of the camera so nobody can see me online. I'm still here, all right? So they talked about FICO scores. So Dr. Bass, she's actually the president of the NAACP branch here in Long Beach. And she's pretty much a hero everywhere. Aren't you like the boss of like 6 different organizations?
I got a lot going on.
All right, so whenever she decides to run for office, make sure you remember the name. Dr. Sharifa Bass. Let me hear you say it out loud. Dr. Sharifa Bass. So I'm going to bring her up and she's going to talk about credit and debt management. So without further ado, I give you Dr.
President at Ports America of Safety and Sustainability. So I cover 33 ports, 70 locations planning as well. So today, I am going to wear the hat of going over debt and credit management. Because let me tell you, this is one topic that most people have to learn the hard way, right? And so, let me see, touch screen, there we go. So today we're going to talk about building your financial confidence and wealth through your debt and credit management. So by the end of the session, you are going to have a really good understanding of how your credit actually works, how to manage and pay off your debt strategically, how interest rates affect your money, how to protect yourself from fraud, and then just some basics to the student loan. I'm going to have a good story because I just had to deal with them yesterday. So, let's start with credit score. How many of you guys know what your credit score is? Just raise your hands so you know what it is. All right. So, I'm going to talk about the credit score. I want you to have a clear understanding. That number, it represents your financial reputation, right? So, I asked the guy, what's your credit score? He's like, oh yeah, I'm good. I got 540. I was like, ooh, you don't know what a credit score is then. You think what that is good. Who knows what the highest credit score is? What is it? 850. And we family in here, so we're gonna keep it real. We're gonna just talk. I'm not here to just, talk at you. We're gonna make it inclusive. A lot of people say, well, white people are born with that. And I'm gonna tell you how. So that when your children are born, they also can have that 850 score. All right? Because it is really important that you want to be recognized as a prime borrower. Who knows what that is? Prime borrower. You know? No? Okay, well, let me tell you. That's when you got a high credit score. What did you say it was? High credit score. Which is 850. You get low cost because you got that high score. And who typically has that? Predominantly white communities, upper middle class. So when they walk into a place to buy a car, let me tell you, they walking out with a low interest rate because they got a high credit score. All right? You know what a subprime borrower is? They do not have a high credit score. They are subjected to predatory lending. So that means that they got a low credit score, that 540 like I told you guys about. They tend to have lower income. And who do those people look like? Black and brown community. Right? I hear you laughing back there, but it's true, okay? And you know what happens to them? A lot of times, high interest rates. And you know where we find a lot of those? When we gotta live paycheck to paycheck. We gotta go get that payday loan. And let me tell you, those are targeted for the poor community. They are made so that you don't ever pay those things off. Okay? They are made to where the average payday loan costs 250 to 600% in interest. They charge you fees and interest for every $7 that you borrow. Okay? So, who knows? Well, it shows it here. Are you familiar with the 3 credit bureaus? Raise your hand. Okay? All right. I'm going to tell you about it. There is Equifax, there's Experian, and there is TransUnion. If you have not logged in to each and all 3, you need to do so. All right? Because each one of these credit bureaus has your credit financial score. And they all report it a little bit different. So your FICO Vantage score, those are the 2 primary models in the U.S. that's used to calculate your credit score. That's what's used when you go buy a car, a house, credit card, all of that. Okay? They predict the risk you are to the borrowers. That's Well, it's broken down into these categories. 35% of your score is based upon your payments. And I'm gonna tell you a story real quick. I was traveling for work. I don't typically use my Macy's card. And I used the card, it's Christmas, got the grandkids something, then forgot that I had been charged. Went and traveled, next thing you know, I was like, oh yeah, I did go get that. 31 days later, 31. Okay? That's beyond the 30. I said, oops, I forgot I didn't pay this, need to pay. I was out of town, blah, blah, blah. Okay, yeah, we'll take your payment. The next month when I went and checked my credit score, it went from 802 to 650. And I was like, whoa, what just happened? I called Macy's, hey, come on, great, silver, no, I was out of town. It didn't matter what, I pleaded with these people for 10 years. They kept that negative mark. It didn't matter if I was good paying, if I could show them my income, it did not matter. It impacted my payment history for 10 years. I can't stand Macy's. Still to this day, I'm mad at Macy's, okay? Because, you know, you think after 7, you can start like, hey, hello, it's been 7 years. It's crickets. They didn't care. That's why I can't stand Macy's. The next one is your credit utilization. You know, your credit utilization is 30% of the score, so that's another big one. And you gotta make sure that you are on top of your payment history and your credit utilization, because what lenders want is that you are not over-reliant on credit, meaning you living on credit cards, and that you can manage your credit without maxing it out. That's what credit utilization is. So you want to keep all your balances below 30%. If they're not below 30%, you better make some payments, get them below 30%, and then it's not negatively impacting that score. Even better, you want to aim for 10%. That should be your goal. Keep your utilization down to the 10%. And then you want to pay your balances down before that statement closes. Okay? Because now you're combating the interest. And we'll talk about that in a minute. So basically, just because you have it, don't mean you should be using it. All right? You got a credit card, you might got 15,000 credit limit, don't use 14,995 or 15,050. Because now you're over the limit, keep it down. You want to shoot to 10%, don't go over 30%. Your next one is all right, your length of your history. All right, how long have you had credit? So what lenders want is to see that you had your Macy's card for 30 years. Okay, that's the limit. This is worth 15%. It means that you have a long history of being able to manage your credit. Right? That's what it tells them. If you're keeping old accounts open, even if you don't use them, avoid closing them. Why? Because it's contributing to this 15% of having a long history. Yes. Time builds trust. That's what I want you guys to remember. So don't erase your history. You want them to know, look, I pay my bills on time, and I've been doing it this many years. It's worth 15% of that credit score. The next one is new credit. How often are you opening accounts? That's worth 10%. What lenders want is that you are not desperate. Every other month you opening up a new credit card because you're living off your credit cards. You are not taking on too much debt at once. Okay, they want to know that you're not doing that. So how do you improve this? You avoid applying for multiple credit cards. Don't keep applying for those cards in a short period of time. Doesn't mean you can't, you know, if a couple of years have gone by, sure, feel free. But only open credit when necessary, so that it does not show them, ooh, this person, hey, they need a credit card, what are they doing? Because that tells them you ain't got no cash flow. So just remember this message. Too many applications equals a red flag. Ding, 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 ding. They're on red alert if they see all these applications that you're opening. Next is a good credit mix. So what does that mean? A good credit mix is you don't have the same type of credit. It means that you got a credit card, a auto loan, a mortgage, you might have some installment loans, you got a good mix. That's worth 10%. So keep in mind, you don't need every type. That don't mean you have to have it. Just be responsible with what you have. All right? And so just the key message I want you to remember here is mix it up. Because having 15 credit cards, that's not a mix. They don't mean have Macy's, American Express, Visa. Those are all still one category, which is called a credit card. They want you to diversify to show that you are responsible with paying multiple types of credit. So the recap here, your credit score is not just financial. It impacts your housing, it impacts your employment, it impacts the insurance rates. Credit equals access and opportunity. That's what I want you guys to remember. Because if you have good credit, you're going to have access to some good interest rates, which is going to give you the opportunity to purchase anything that you want. Because I can tell you this, I got it was 842 now, man, it's dropping to 850. But I could walk into any car lot, my brother laughed. He goes, man, I ain't never seen, my sis, she can walk in there, she's only up in there for 30 minutes. Because I've already called the dealer, who already ran my credit, and I called him and say, listen, I just did, because my BMW lease is coming up. And I had to call him up, hey, my lease is coming up, I want the all-electric SUV, BMW, I agree. I said, I'm gonna come out in September, so I've already sent it in, and I made it, and they said, okay, but we're gonna need you to come. I'm not coming in. I'm telling you, this is what I want. I'm not paying over this, and I expect my interest rate to be that. Oh, wow, I don't know, I'm thinking, I said, then put your boss on the phone. It's his boss on the phone. I said, and when I come in, you will have exactly 25 minutes of my time. I'm already up to that. Your BMW will be here October 10th. Remember, you got 25 minutes of my time. And everybody's listening to thing. Do you want your coffee? Yes. Because again, credit equals access plus opportunity. I have the opportunity to walk into anywhere and tell them exactly what I'm going to do. Not what they're going to do, what I'm going to do. My credit score is 540, I will be up in there for 5 hours filling out papers and trying to figure out what loan deal, this, that, because I was once there. And I used to sit there for 5 hours. Man. And still didn't get the car. So just, if you do these 3 things, your score will improve. Pay everything on time. Remember the basics. Keep your balances low, under 30%. And do not open too many accounts, because credit companies, they are not looking for perfection. They're looking for consistency, discipline, and a responsible behavior every time. Over the time that you have it, okay? So that's what I want you to remember for that. Next is managing debt. So we have 2 strategies when it comes to how to manage your debt. And you got 2 different, I would say there's 2 different kinds of people in the world. The people who want the quick wins, right? Like, I want instant gratification, and then there's people who are like, I'd rather just wait and get the satisfaction in the end. So I'm gonna show you how these two are when it comes to debt strategies. So you have the snowball effect. This is more of a behavioral strategy. This is where you gotta pay off your smallest balances first. And then roll whatever you were paying into another monthly bill. Okay, that's called the snowball. The pros to that, this is for people who, I want quick wins, right? I need to feel like I paid something off. This is it's gonna motivate me to pay off my next bill. Because now instead of 5 credit cards, I only have 4, right? That's a win. Because they instantly see they went from 5 to 4. Then you have the debt avalanche. So with the avalanche, it's paying your high interest first. So that means if you got 5 credit cards, you're putting them all in order based upon the interest that you're paying. Okay? Now, the pros to this is that you're gonna save the most money doing this because you're reducing the interest that you're paying over time. You got a faster, long-term payoff, and it's a more structured approach because you got, okay, number 1 is my highest, number 2 is my next highest, I'm gonna pay off number 1 first, okay, when that's paid off. Who in here likes the instant win? Raise your hand. So you want to pay off, it don't matter what your interest is, I wanna go from 5 to 4. Who would prefer I ain't paying that much money over time, let me pay off this highest interest rate first? Who's more like that? Okay. There's no right way. But I'm gonna tell you about interest. Because when you know a little bit more about interest, you might change the way of which strategy that you pick. And the reason why is this. So, that's my granddaughter back there, my oldest Phoenix. And say I gave her $10,000. And I tell her, you're gonna get 1% on that $10,000. Do you know that if she was 29 years old and I gave it to her, she will not see that money double for 72 years at 1%. So if I give it to her at 29, she better hope she lives to be 101 before she sees that money double. For the sake of time, I'm gonna fast forward to 10%. I give her that same $10,000 at 29, but she's gonna get 10% on her money. Instead of every 72 years, every 7.2 years, her money will double. So instead of at 101, from 29 to 36, now her money's double. From 36 to 43 is double again. Keeps double to where now she's got 640,000 versus the 20,000. Now, who gets those 10% ratings on their money? Is it the person who's the prime or the subprime? Prime. Interest works for you and against you. So the rule of 72, if you got a credit card and you got a 10% interest, every 7.2 years, that thing is doubling, compared to if you only had to pay 1% on your money, you're paying more towards your principal. So that is where interest works for you, or it can work against you. And as long as you have a clear understanding, because right now, like on credit cards, what is it, like 29.9%, 32, 35? It's crazy. You're not getting charged 1%. Think about your money sitting in a bank right now. I don't even know if a regular bank is giving you 0.5%. It's more like 0.05 if you're getting anything. 0.1. You can tell I don't have my money. You got to forget that. That's why we got money infiltration right now. Because here's the deal. You need to put your money where you're going to get the biggest bang for your buck. And you need to spend your money where you got the lowest interest rate possible. Because money in a bank or in a financial investment earning a higher interest rate is working for you. When you you got your credit cards at a lower interest rate, that is working for you. When it's at a higher interest rate, you're not even paying off that debt that you bought. You paying off the interest that you keep letting build up because you haven't paid it off yet. All right? So when you think about it that way, the credit card strategy, we got 5 credit cards here. You see the interest rate, you see when it's going to kick in. Knowing the rule of 72, how would you, which of these credit cards would you pay off first? Think about it, look at it. You got Discover, you got Visa, Amazon. Looking at it, you want to take a stab?
I would pay off the ones that are leased and they were down to the cards.
So you would go to the balance and not the interest?
Yeah, I'd go to the balances. I would go definitely to that.
And you would pay off which one first?
I would pay off if I was to pay them all off, like as far as an order,
You gotta go in order.
I'll just pay them off, least to the highest.
So lease meaning he's gonna pay off the Visa first?
Yeah, I would pay the things off first.
And then you pay that American Express? Does anybody have a different option?
I would close Amazon first, because my utilization, and the amount that's almost at your limit. And it's high, it's not as high as the Visa, but it's next in line.
Okay.
So I would give you that one first.
Anybody else got a suggestion? So,
I have a suggestion.
go ahead.
I would pay off the lower ones first.
Okay.
Because I take those fees that I was, that payment that I was paying, and then started tracking the ones with the higher interest.
Okay, all right, that's a different strategy. Okay. Okay. So that is definitely a smart way to go. So because even though Discover,
Can you repeat what you said quicker?
what she said was she would pay off the Discover first. The reason being, because when that joker kicks in, she pays 0%. But if you don't pay off a 0% interest within that 12 months that is giving you, the interest that kicks in is not what your balance is. It's what you started with. And they will drop that entire amount. I was talking to my sister-in-law before this last class. And she was like, yeah, girl, I'm getting ready to pay off the Europe trip. Because, you know, this month, it runs out by 0%. So I'm going to pay it off next month. And I said, did you hear what you just said? And she goes, yeah, I'm going to pay it off next month. So instead of 12 months, I paid it off in 13 months. I said, what day is it? And she goes, well, next week. And I said, girl, you don't pay that thing off next week? Because you charge $22,000, right? And at a 29.99 interest rate, all that from the day you charged $22,000 is about to drop. And she goes, no, it's just on the $1,000 I owe left, right? I said, girl, did you read when you got the 0%, you know, little letter? And she was like, girl, let me know that. She looked and called me back. She said, girl, I'm glad I called you. She was only a few days off from it's about to kick in. And so you typically, even though, don't be fooled, get the 0%. That is the way to go. But you better make sure you pay that joker off in the amount of time. If it's a 12-month, 18-month, whatever it is, you better pay it off before the end of that month. That ends your contract with them. Because they're hoping you don't. So they can slap all that interest on you. Because a lot of people don't. But you're right, they do show you, and they show you just how much and at what year point you will be paying. So, the recap, individual card usage matters. It's not just your overall score, right? So you want to make sure each credit card you're looking at and where you're at, not your overall. If you got 5 credit cards and your usage on all 5 is 20%, and you're like, yeah, I'm good. No, because you got one of them that's 68%. You need to make sure that you look at individual cards. Use low interest, low utilization cards. Pay off your high interest debt first to save money. Call the credit card company for a credit increase. So if you're at $19,500 and your credit limit is $20,000, the key that you can do is call the credit card company and say, I would like a credit increase, please. Because when you then go from $20,000 to $30,000, just helps your utilization. All right, that's a quick little tip. Credit card reality is this: when you're carrying balances, just remember that equals paying extra money. Minimum payments, that's a long-term debt trap. You can't just be making the minimum payments. So a best practice is, if you can, pay off your balance in full every 30 days when possible. Preferably before your statement hits, because if it's before your statement hits, you don't get hit with any of that interest. So then you have to ask yourself, would you rather feel good quick or save more money? You gotta figure it out. Because a snowball, yeah, you're gonna feel good because you went from 5 to 4 credit cards. The avalanche, you're gonna save more money because it's less interest that you're gonna be paying. So then we're going to quickly talk on student loans. Okay. This is near and dear to my heart because I went to school late in life and got an MBA from CWI. And then somehow they were just starting their DBA program. So I'm part of their inaugural cohort and was a student speaker. And then went got my doctorate in business administration at Pepperdine. But with that, Pepperdine is not cheap and came with some student loans. So I'm speaking firsthand on student loans. So I just had to call them yesterday because, as you know, as of July 1st, if you don't know, the Trump administration gave a complete overhaul to the student loan process. All right, and it is not in the favor of the black and brown community at all. So when it comes to your student loans, you can pay it off fast. That's your standard plan. Higher payments, less interest, financial freedom sooner. You can pay it off flexible, which is the income plan. So it's based on your income. If you start making more money, your payments are going to go up. If you start to lose your job or make less money, your payments will go down. You got lower payments, you got more interest because it's at a higher interest rate, and it's longer over time. You have extended plans that have lower payments, but again, you're going to have more interest over time. So I got to see all the different plans. And I said, so you want somebody to pay $8,850 a month? What kind of graduate plan is who's paying that? And the lady said, okay, well, you know, we do have the extended graduate plan, and you can pay $2,250. But over time, you're going to pay $1 million, this, that. I was like, wait, what? I was like, I didn't get no loans that much. Well, then you can go into the income-based plan. It's going to go up. But if you lose your job, then it'll go down. And she goes, but here's a little caveat. You don't have to tell them when you start making more money. Just when you call the next year, because you have to check in each year. Just tell them nothing has changed. And I was like, really? Why is that plan? You know what? There are different plans. There are different plans, there's consolidations. The key insight is this. Payments can be as low as $0 a month on income. But longer terms, you're going to pay more interest. cheaper loan, what it means is that you're going to have a longer payment. That's what I want you guys to remember when it comes to that. Because student loans aren't just about making payments, they're about managing time, and your financial future. Because remember, those go on your credit report as well. So one other thing I want to touch on real quick is your fraud and identity protection. So I asked you guys about the 3 major credit bureaus. How many of you guys lock your credit score? Yes, good. That is very important. And the reason why is because nowadays with AI and all these scams going on, people are stealing people's identity. I had somebody at my job, his neighbor, they spent thousands to clear up a stolen identity that went on in their house. Somebody stole their identity, it was buying a house in another country, they was buying a house or a car in another state, and they had to prove who they were, not prove that that person was a fraud. They had to prove and spend all kinds of money to protect themselves and their identity. One way you can do that, first line of defense, freeze your credit. Make sure that you turn on your fraud alerts. That is very important. Have the 2-factor authentication. So when you go into your credit, yes, it's annoying, but have it ping your cell phone or go to your email so you have to key in the code. And then your password managers. Making sure that you're constantly changing your password. Never give out your personal information without verifying. I had somebody call my phone the other day, and they said, they must have knew through AI that I was thinking about my student loans. They said, oh, ma'am, want to call you over here because we got a great deal for your student loan. I said, really? I was just getting ready to call you guys about this. They said, yeah, all we got to do, I just sent you an email, go click on that email, and I said, well, how come this doesn't say from the same bit, but it said the federal student aid, this and that. And I said, well, hold on 1 second. I called the people up, and I said, hey, I have Rebecca on my phone. I just want to confirm that Rebecca works for you guys, and that you guys are actually getting ready to offer me. Because what was fishy, she said, we're going to wipe out 67% of your debt. I said, really? You know, you got me there. You're wiping out my debt? Why you going to do that? And so next thing you know, the lady comes back on, she said, ma'am, we would not be wiping out 67% of your debt. You're right, that's a scam. I get back on the phone. Rebecca, if you don't get off my phone, and quit playing with me because you have wasted 4 minutes of my time. I said, matter of fact, I'm about to connect you with my attorney right here. Hold the line. She went, click. But if I would have clicked that email, all of my information, she would have gotten. Because if you guys do like I, all my passwords are saved. And let me tell you, that would not have been pretty. Do not click on those emails that come across. You gotta be very cautious, especially because the thing that got me, my job does training on it. She started, well, no, ma'am, you just need to do this right now. You can't urge it. And I was like, well, I gotta do it right now. If somebody is cussing you, my husband called me the other day. He said, Amazon said that they're gonna close my account. I said, you got an Amazon account? He said, no. I said, then why are you calling me? He said, well, she was like saying it's gonna be urgent. They gotta you don't have an Amazon account. But they make it to where they know you, and they make it to where you are feeling a sense of pressure, right? Don't buy into it. Don't buy into it. Because if it feels rushed, it's probably a scam. That's what I want you guys to remember for that. So the key takeaways, if you don't remember anything else today, credit is a tool, so use it wisely. Debt can either build or break your financial future. Interest is either working for you or it's working against you. And then protect your identity like you protect your money. Financial discipline creates financial freedom. Your credit tells your financial story. So make sure that that story works in your favor. All right? So, I want to end with, I'll take some questions, I will. But I just want to end before with, I said I was an ACP president. We have a Freedom Fund Gala, and I want you guys to either go to that table, scan the code, take a flyer, there's this melody over there. So if you're not a member, please become a member. But if you want to see some of your community members being honored and for their hard work in the community, some networking, some dancing, and a night of fun. Last year we sold out, and we are honorable to selling out again. So I encourage you to get your tickets today. So, questions on credit, debt, yes?
You say don't concern your emails. You ever see, I think it's common text message, but they'll come up with maybe like 5 digits instead of a full number or something like that. Should you pick up those things?
Don't, no,
You're qualified for a certain amount of money.
do not, do not.
But you know what I'm talking about.
I know what you're talking about. Do not click on those. Hit delete. That's the only one you need to worry about. Delete. Don't even open it. Because scamming is becoming more and more sophisticated every day. I'm telling you, I answer my phone, hey Sharifa, like they know me. They got my name down, and I'm like, whoa, most people mispronounce my name, so I must know you. But, hello? They call you by your name. They even got the little twang, like they've been knowing you forever. Hey, what's up? Hey, okay. They are very sophisticated now. Don't click text messages where you won something, click this link. Text messages will go through your phone as well, because a lot of people store their credit card information within their wallets. So don't do those. When you swipe your card to scam? Yes, they will. You have to be very careful of those as well. Even at the gas station, they sometimes put them within the gas station thing, and if you're not looking at the right harbor, you're on your phone, you're talking to the attorney, trying to get some gas, there's a few people that's been scammed that way. To write down their bank account. Hi.
So, back off what you were saying about the emails and not clicking them. So I know at work, we have what we can read the email, click on it, but then we can use it efficiently.
Yeah.
Right. So is there any kind of way, like on your phone, if you tap on it, you're done, or you can just read it and not, you can't do it like you can do it at work, right?
You can select your to show you the message. So it just depends on your phone setup. So like on my phone, I have it set up to where I can read the first few lines so that I can tell immediately like what is it called. It's just on your view, under your settings, it's just how you want to view it. Okay. So you want to view it to where you can read a little bit of your email.
Okay. And on this, David, that you all are speaker.
Yes.
Jackie Robinson, Gabby, wasn't he the Concerned Black Parents advocate, maybe back in the days? Is the same
He's on the Long Beach Unified School District. He's been all different kind of roles, and he was just recently promoted to become the superintendent. Yes.
Okay. Oh, she
Jill is gone. Yes. That's Jill's replacement.
Okay, thank you.
Yes.
Here's a quick question on your email, it says
Oh, it should be friends, yes. It's friends of Dr. Betts at gmail.com, yes.
I know you mentioned something about that your credit score impacts your employment. Could you elaborate?
Yeah, so depending on certain jobs, they will run your credit. And if you have a credit score, it's almost like I tell people with college. College doesn't make you smart. But what it does tell people is that you were disciplined enough to take your butt to school, sit your butt down, take a test, and you stayed disciplined enough and dedicated enough to complete something. Certain jobs you go for, that is what a credit score tells them. So where if you have a low credit score, why would they want you touching or our clients' money? And it could impact you from getting a job. Yeah, so it just doesn't impact all jobs, but there is more and more jobs where they are looking at credit scores. Yes.
What's the benefit of bankruptcy?
Excuse
When
me?
you already have the bankruptcy, when you go to the, what's the benefit?
What's the benefit of the bankruptcy? Ain't too many nowadays, but sometimes I will say this, when you're in debt so much that you just cannot get out, and it is a last resort, it is a way to restart. It's a way to start over again, but it's going to take you a little bit of time. And bankruptcies today are a lot different than they were back in the day. Back in the day, people, they were slanging bankruptcies and filing, run up the credit, dial it in, because there wasn't a lot of repercussions, but that's a lot, it's different nowadays. Because I know of a couple people that filed, and I'm like, oh, you should get a credit card. Nah, it's not that easy anymore. So, as a last resort, if you have to restart because you've gone to a financial planner, they try to help you put your credit cards in order. They try to help you be disciplined and give you a way to get these things paid off. If it's just not working, you've gone to credit debt consolidation, it's a last resort. Because it will have a 7 to 10 year impact on your life. So if you're thinking 5 years over buying a house ahead, you might want to think of another option. Okay, so last resort, that's what I want you to think about.
What's the difference in like, what people have no money to pay all anything, but if you don't want to go to bankrupt, if you don't pay at all, because you don't have money, even if you go to home station and all that.
So that's where you would first go to someone who can help with your debt credit management to keep you on a strict plan, right? Because here's the deal, a lot of us think like, oh God, I don't have enough money. But when you sit with a financial planner, you all of a sudden figure out that you're spending $150 on Starbucks. You're spending on 3 different apps, another $250. You're spending on, you start all of a sudden having to put everything that you're spending money on, to where you got the money to get out of debt. You just have to be disciplined to stop spending unnecessary money, because all that is unnecessary, right? And spend on the necessary, which is your debt. And that's what a financial planner will help you do. And when they can't help you do that, that's when you think about bankruptcy. But a lot of people, they just don't outline every single thing that they're paying for. I remember one time I was like, why am I paying for 2 Hulus? You know? Oh, when, you know, sometimes you just sign up for stuff and you don't really go. When you take a deep dive with your financial planner, you will find money. You will find that you got the money to get out of debt. You just got to be disciplined. You might have to cut those streamings, cut some Starbucks, cut a couple of things for a few years, and then you'll get out of debt. All right, I think my time is up. So, Tony?
We're still waiting on the lunch, but I'm just gonna go ahead and get some other stuff out of the way real quick. Y'all see this right here? Yes. All right, so what's your name, Lee? What's your name? Lee. Not you, Mr. Lee. It's still right in front of you. Jerry? Okay. Oh, Jerry Maris. Hey, welcome. And Simon Smith is out there in the audience. All 3 of us have something in common. You can tell when we're hot. Because I've been hot since I've been here. Not the good hot, like, you know, that my girlfriend went here. It's not the sexy hot. All right, so Isabella gave me this little fan right here. And no disrespect, I think I'm So anyway, this fan is really great. So before we get started, because lunch hasn't made it there, I want to do a couple of things real quick. Is that okay? All right. Can all the men stand up, please? Yeah, I'm doing this. I am. Come on. Y'all know why y'all standing up right now? Women in this room, can you give these men a round of applause, please? The reason why I put y'all on blast like that is because every one of my workshops has been 95% women. This is the most men I've had. Now, guess what? I know we know everything. I know this. I've bought stuff from Amazon and all these other places and threw the instructions away, and I was always proud to have all these extra pieces left over and the stuff was falling apart. I know we know everything. But for some reason, when it comes to finance, we don't. So I really appreciate all of you being here today. Is that okay? All right. Yeah. So because this is going to have to happen anyway while I'm waiting for the lunch, there's a couple of things I'd like to do. So have all, Dr. Vance, before you leave, okay, I want everybody to come up. So I'm really proud of my president, so. Drop the mic and now she can keep going. So let's get So what I'd like to do while we're waiting, is anybody hungry right now? But what I'd like to do is, every one of my workshops, there's a couple of things that I like to do with the workshops, right? Because this is a community event, I'd like to be able to share some of the community resources that are available. So once again, I'd like to give a hand to BMO Bank for coming out. We have our small organizations and we have some of our entrepreneurs that like to join us with these workshops. So I'd like to bring them so they can share a little bit about their businesses. Is that okay? All right. That was your cue. We got to work on that timing thing, you know. All right. So I would be remiss not to have the NAACP come up. So I have our membership chairman, Ms. Melody.
Thank you. So I have the pleasure of being able to see that some of your faces are now familiar to me, as I've seen you all at other events in the community, including the other financial literacy program that we had in the city of Paramount. So has anyone here, if you've heard of the NAACP, please raise your hand. Fantastic. If you believe, if you have an understanding of what we do and how we can support the community, please raise your hand. Okay, fewer hands. If you are a member of the Long Beach branch of the NAACP, raise your hand. All right, so I've noticed that you've heard of us, but you don't know what we do. Well, we are you. We are out advocating in the community, supporting each other. We are building up our legacy. We want to make sure we are empowering the community. We want to be able to provide resources to you. We also need your support. As we have voting initiatives and voter rights initiatives, we care about our environment. We have community health initiatives. I think that it would be imperative for you all to come and become a member of our branch, as you can contribute to all of that. You mentioned the Freedom Zone gal in my life is back there videotaping NAACP branch for Long Beach, and that's if you live or work in the city, also neighboring cities, like Bellflower. We want you all to join in on the legacy. We are a community, and I feel like there's power in numbers. We all are paying attention to the political climate, right? And there may be instances where we would be able to support you, right? But ultimately, I feel that the NAACP is a great opportunity for you to be of a service. I do feel like that is the most effective way for us to be able to meet together collectively. So again, I'm encouraging everyone here, please come to the table. If you do not have the funds available today, I would love for you to add your name to our list. We will email you with resources. We have a newsletter that's soon to come out, and so that you can be in the know. And the opportunity for you to join us is always available to you. So again, thank you for your time. I want to see now how many in here have an understanding of what the NAACP does. There we go.
Piggyback one thing. Next Friday, is the due date. We are accepting applications. If you know anyone in college, please have them fill out the application. We want to give away scholarships at the Freedom Fund Gala there next Friday. So please,
I think that's somebody that might be doing this.
if you are a college student,
Malia Reese.
apply. We need your application. That's here all the time. People got money to give out, people turn in the application. We have the money, so please go see Melanie and we will email you the application. It is due next Friday because they are already scoring on Sunday because we are giving out money 2 weeks after that.
Did you want to drop the mic before you leave, or?
So now everyone here has an understanding about NAACP and how you can be able to support and impact in your community. So I hope that every hand that I've seen will make your way over to our table so that we can get your information and get started with your membership. Thank you.
Yes, ma'am. Okay, back in the day.
Back in the day.
We used to do the vote.
NAACP was also providing opportunities for lower income families. Is that still a fact?
So we do have our, I don't know the exact name, but we do have a committee dedicated to supporting with the labor force. We have individuals within the branch that support with workforce development and providing resources to those who are looking for employment. So the resources are there. So if that's what you need, come talk to me and I will see how we can get some information. All right? Thank you. Thank you for the drum, too.
So now I'd like to bring on Mrs. Christina Faulkner, representing pharmacy.
Morning, everyone. I'm representing Pharmacy. Pharmacy is a beauty, skin care, supplemental nutrient company. They've been around since the 1930s. It started from Istanbul, Turkey. And now they're represented in more than 50 plus countries. So, it's not going to review this pretty much one of the main things that I like to sell is I sell a lot of the supplemental nutrients, which is part of our new challenge that we have. It's a 30-day challenge. So it's 30 days, 30 minutes of cardio and 3 products. And so everyone is in a team of 3, so we hold each other accountable. And that way we make sure that we are exercising, we're taking the right food, the right supplements to stay fit, trim, and pretty much healthy. So I would also, yes, that's been $10,000 for which I was spending to most of it and stay consistent with those. I also have a Wednesday walks, which I do in England at Darby Park at 6:15. It's free, anyone can come out and look on Eventbrite and sign up. And also feel free to follow me on Instagram or look me up on Facebook. Like, if you have any questions, I am in that. I have all the products that you need. If you have any questions, you can change it on the sub or the beauty products, skincare line, that's done. So thank you for your time.
Now, I was going to introduce Ms. Araceli King, but I don't think we have time to list all the things that she's a part of. talking about first? The community managers? Or GP managers? Okay, I mean, no, okay, so we're, now, this young lady right here, I couldn't wait for her to share her story, because I got a chance to hear a little bit about how she got started with GP care packages. Without stealing her thunder, I want her to share, is that okay?
Yes.
Thank you for inviting us. Good morning, everyone. Good morning. For me, giving honor to God first and foremost, GP Care Packages went to the founder, my name is Louise Parker. And we provide for the unhoused community for those that are in need in our community. We provide basic necessities, we provide clothing, shoes, and hygiene items, and whatever items it is that we're able to receive from donors, we provide. We actually had an opportunity to now have a president, which is Mr. Marcelo King. We have wonderful volunteers that have come out to be with us as far as establishing and growing over the years. It's been a 501(c) now for 5 years, but we've been doing community events for 12 years. And the reason why is that at one point in time in my life, for many, many years, I was homeless. And the Lord delivered me and saved me. And in 2014, called me and said, listen, this is now your assignment. At that time, started putting together hygiene care packages for those that are in need. And over the years, unbeknownst to me, that he would grow it into where now we're able to provide for many people that are in a situation of temporary or instability. And what we do now is we provide for them. We actually have a clothing closet. If you are ever interested in coming out and volunteering with us, we do have community events as well. So we do annually have Christmas events. We've now started doing summer events, back to school events, Thanksgiving events, and we have a clothing closet. And at our clothing closet, we're able to provide a couple of outfits, shoes, blankets, backpacks, whatever it is that they're going to be possibly in need of. Not only are we providing tangible items, we give them encouragement. We show people that they're loved, they're not forgotten, that they're seen, that they're valuable. And we've been able to have lessons now of being able to provide resources for employment, resources for giving them information where they can go find help. And just being able to show people that we see. And a lot of times people take for granted that if you have a cardboard box or you don't have a home, or if you have a home, don't take for granted that people are people. GP stands for God's people. I believe that God is real. I believe that there's a Father, a Son, and a Holy Spirit. And I believe that we need to show people that they're valuable. And GP Care Packages like that's exactly what we do. We strive to do it. And we're thankful to be able to have a part of community where we're able to come and connect with other organizations, to be able to provide help in any type of and learn financial stability. A lot of people don't know, a lot of people are not just homeless on drugs. Not a lot of people are homeless because they have a mental health issue. Sometimes it's financial instability. Sometimes it's knowing how to financially take care of or save. You know what I mean? So it's generally being able to be connected in one body, doing all different parts. There's all different parts of the limbs, so we all have to come together as a community. I say that to say this. If you haven't received one of our information packets, please let us know. We can review them. If you ever want to come participate with us at any of our events, come out and join us. It's always on our website. If you're able to donate whatever it is you can. We do take gently used, new clothing, men and women, shoes, hygiene items. If you're able to donate financially, please be a blessing. You can always see where your finances are going. If you just want to come out and volunteer, like I said, either at one of our public community events or our clothing closet, let us know. We're located at 412 East Broadway. We are there Tuesdays, Thursdays, and Saturdays, 9 to 1. All the information is listed. Okay? So please, just know that no matter what, nobody's exempt from homelessness. Nobody's exempt from struggling. But we all have to come together as a unit and as a community to show people that they're loved and they're not forgotten. And thank you so much for your
I didn't know it was going to be on. All right, so here we got the Long Community Land Trust Fund up next, Ms. Diane.
Today. My name is Diana. I'm the membership coordinator at Long Beach Community Land Trust. Raise your hand. How many of us have heard of the Community Land Trust before? Okay, some people. Amazing we have Marina. She's actually a member. So that's okay. I made a new concept to most of us. For me, when I first started, I was like, what is this? But it's a form of social housing. It has roots since the 1960s in Georgia. It was started by Black farmers in pursuit of economic and racial justice, and became the largest Black owned tract of land. So basically, the way it works is, so in the regular market, individuals or companies can buy land, they can buy homes. They own both the land and the home, and they can sell it back at market prices. And this is usually done very quickly, right? And there's no investment in the community, there's no relationship with the community, and often the community doesn't have a say in what is being developed, right? Because as a community land trust, we purchase a piece of land, we purchase a home, we purchase an apartment, we own the land, but the people that live in those homes collectively own their homes, their apartments, and they get to decide what is developed in their homes and how it's maintained, if it's remodeled, and we keep that land out of the market forever. So it means that it stays in the hands of the community forever. So it's a really cool way to promote community ownership in Long Beach. We are officially having our first building at the end of summer, so it's very exciting. It's on the west side, it's a senior building, so these folks are going to have a home for as long as they like to remain there. They don't have to worry about rent increases, and it remains permanently affordable. So that's a little bit about what we do. I think everyone has a flyer, but if you need any extras, we're at that table in the back. We also have a sign-in sheet if you're interested in joining our newsletter. But thank you so much for your time.
All right, well, you guys are hungry, just got a couple more to go. Renee Robinson from the Options coming from.
Hello guys, my name is Bianca Lewis and this is Miss Renee. Outside of this, Miss Renee is a caseworker for RBS, which is a human trafficking drug center. So not only am I one of the clients, I've been a client for the past 8 months, but I have seen Miss Renee assist many women on their journey of human trafficking. But today we are here representing Living Options, which is Miss Renee's own personal business. And I will pay my respects and my dues back to her by supporting her. She has a perfume and business. But overall, Living Options is a sensor-based, kind of creative business. And what it's supposed to be for is for community and people to get out and kind of create on their own. You know, instead of us making perfume or us making a chemical drink for you guys to get in touch with body sensors. So that's what Living Options is. Sorry, I'm a little nervous.
Yes, we have a relationship, Diageo and I, and what we do is it's like a 50-50, each transaction, 50% goes to her, 50% goes to the options. Because for me, it's not about the money, it's really about everything that Diageo is speaking about. Just for you as an individual, just to take a pause and get into yourself. We've heard the word self-care, but it's really important for us to stay creative and, you know, one of the main things that we focus on is perfume making, and there's some other workshops that we do as well. But today we're focusing on perfume making. So if you can, stop by, please. We have 2 different sizes, one for $10 and the one for $20. Yeah, so I hope to see you too. Thank you.
Do you mind if I say something, Renee? Do you mind if I say anything?
Yes.
Yeah, can you come up one more time?
Yes.
RDS stands for Restoration and Diversion Services. It's a drop-in center where a lot of the ladies, we're located on Long Beach Boulevard in Compton, which is also known as the Blade. That's where you see a lot of ladies, we like them known as prostitutes, but believe it or not, a lot of them are being trafficked. That means they have a pimp, where they have to, make quota per day, pay for their hotels, pay for everything. They may not even see those funds. It just goes straight to their pimp. So what we do as a case manager, everything we offer is mostly referral-based, housing, employment, education, the list goes down the line, whatever the basic needs. It could be like getting them an ID, social security cards. A lot of times, those basic things that we have are taken from them at the beginning and utilized to, run credit in their name. So, I like to bring a lot of our clients to Tony's events, financial literacy events. Thank you, Josh, for being here the second time. But I just want you to give you an idea. So a lot of times the ladies come in as a drop-in, just take a pause, go into the serenity room, but they come in to get condoms, pepper sprays, window breakers, alarms, safety items, okay? And let me get your name, Eloise? Okay, thank you for bringing up your organization. This is very similar, and thank you for notifying all of us that a lot of times it's financial stability. For our clients, their parents may have, put them out there. There's all kinds of reasons, so each case is different. But if you could just support us with emotional support, come to, facilitate your workshops that might be very beneficial to our ladies. We're open on Tuesdays, Thursdays, and Fridays from 10 to 5. All right? If you want more information, please reach out.
I actually thought about this at the workshop because it kind of correlates through RDS. The one I've been out for lifestyle for 2 years, but I've been working closely with RDS for the last 8 months. I've done internships and different things while I've been there. But one of the things that they have helped me with through referral of a third-party organization is credit repair. Victims of human trafficking can get a lot of things removed off their credit. So because of that, my credit score was a 495 and now it's a 711. So I'm excited about that, and just being here and kind of putting everything together because now that I have that score, I can utilize information that's needed to be here. Very good.
This is actually really important to be able to share that. I got 2 more speakers, but if you'll allow me a moment. I wanted them here because, I grew up, does anybody know what the Blade is?
Yeah.
Where's the Blade? Where? Figueroa, right? Where's the other one? Long Beach. I grew up on Gage and Figueroa. And I used to have to walk home from school past all these young ladies. Now, whether it be homeless people, whether it be victims of human trafficking, they're still human beings. And here we talk about finance, right? Have you ever felt uncomfortable if your money wasn't right and that feeling that you get when your money's not right, how people look down on you? Imagine that being your entire life. So I'm very proud of that young lady because she went from that night to speaking in front of you today. So I'm almost done stalling because you're still getting ready out there. Yes, that's what I was doing. Yes, it is the avenue where all the sex workers basically travel by foot. Right? So I don't want to say the words because I don't want to celebrate that, but the bottom line is a lot of the people that look like you and I are on these streets being taken advantage of. And this organization, what's so great about what I'm trying to do here, what we're trying to do, is everyone here is involved in something. Make sure you share information, swap phone numbers, emails, or whatever, because at some point, we might not ever get rid of human trafficking, but we can sure put an end. How about that? So I'd like to bring up, yeah, okay. So we got two more, so we got Doug Jenkins, one of the directors of BMO, he'd like to share a few words.
Thank you so much. I know my colleagues already spoke about BMO. Just to introduce myself, I'm the market president for BMO for California. And the reason why that's important to us today is we're building 150 locations across the state to go with the 220 that we already have. Now, what does that mean? What we're really doing is building centers for advice and guidance. So BMO is a very different bank. We're very community focused. That's why we are here today. We're at these types of things throughout the state, throughout the country for that matter. Financial literacy is huge to us. And so as I look through this workbook today and I think about some of those first questions, the 5 things that keep you awake at night when it comes to your finances, that's what we're here to do, and that's what we do across every community that we serve, is bring that community into these beautiful financial centers that we're building. Who builds a bank today? We're closing them, right? Everything's on your phone. BMO is a very different bank. We're building big branches for people to come in so that we can do this type of thing in our centers, as well as come out and see all of you. So we're incredibly excited to be here. We're incredibly excited for the support and all the things that you do that we can be parts of. So please come and see us. We've got Jared, Brian, Willow. We're building Long Beach Exchange right by the airport. We're building Long Beach Common Plaza will come up in 2027. We're building San Pedro. We've got one coming in Torrance, as well as many all around the area. So please come and see us. But if you don't come see us, we're going to come see you in places like this and things like that.
I gotta speak this up. What's your question?
What was his name?
Doug Jenkins. Doug Jenkins, yes.
And president?
Vice Market President, or whatever you want to call me,
He's the man, and real quick, Mr. Jenkins, if you're building another 150 branches, that sounds like y'all got some money.
Yeah.
Okay. And real quick, again, these workshops are free to you, but they are not free. Do we understand that?
Yes.
Okay, so I gotta pay some bills. So everybody that can look at your survey, please hold it up, please. All right, everybody that's not holding up the survey, please fill this out, because this is literally how the amount of money that I make on this workshop is a lot, but it would be a lot more without these other people's help. So I'd like to bring up Mr. Jabari Hopkins of Helpline Youth Counseling and tell you a little bit more about HYC.
Thank you all for being here today. We really appreciate it. It's really important that you guys are here because we want to get back to you, and we want to get back to you without cost as well. We want all this information to be free. Financial literacy is something that I wish I was taught during school, but I'm not. I mean, I'm older now, but now I have an opportunity to come out and learn it, and just to see everybody show up today, and it means a lot. And the fact that we have someone like Tony, who is here to come out and community on the weekend. You know, Tony could be anywhere right now. But just a little bit about our program that we find vendors or community members like Tony who want to give back, and we like to partner with them. And the way we partner is, providing food. We don't want you to show up and be hungry by 12, okay, or angry, right? So we got something for you. But also we have our program, Helpline Youth Counseling, and within that we have the Community Family Resource Center. So what we do is we provide resources to the community that you don't already know about, okay? And alongside that, we provide case management as well. So not only do we provide you with a resource, our case managers follow up with you to make sure you have that linkage with that resource. So, and we'll call it in to make sure they still exist as well. So I'm sure some of you get resources and you call them, the number doesn't work, or they don't respond to you, but we set up that appointment for you just so that you can have access to that particular service. Okay, and also if you need mental health services or health services, or you don't walk out to school, any trainings, or any preventative services. So we service ages 6+. So we service the entire family. We are here. We have an office in Bixby, right off of Long Beach Boulevard and Warlow.
You have housing resources available.
We do have housing resources available. We have housing resources for mothers. We have housing all ages. We have housing resources, and just because we have a housing resource does not mean we provide the housing. We will move you to the resource for housing.
What about mental health? Do you have housing for mental health, like, where you can get for housing for mental health and things of that nature?
We have resources. Yes.
Where's your address?
I'm gonna provide you, you have this flyer actually. We're in Bixby. Our address is 3605 Long Boulevard. We just moved there, I believe, in February. We have office, our main office is over here, but because we are main service in the South Bay, we get an office in the South Bay. So now we have it in Bixby. And then what's
Trader Joe's along the boulevard.
yeah, right down the street.
The red big one.
Right down the street.
Okay.
Any other questions? Oh,
That's the QR code, Don. Thank you very much.
one more thing, make sure you complete this, this is your meal ticket. Okay?
Yes.
So, we have some food out there, Isabella is in the back.
She's finally blacking us down.
She will be accepting.
Successful story.
The completed meal tickets. And you can get food as soon as you are ready.
Thank you so much, Glory. Okay, everybody, we're kind of slow on time, so we're gonna make this a working lunch. Okay, so let's go ahead and break, grab you something to eat, make sure you have those surveys completed, and enjoy your meal. Get started shortly. having lunch right now. We'll be getting started in a few minutes. Anybody there? I'll go ahead and put the camera on the room.
We got to see that. There's a new, we need to look and see like this part section on the other side, but next time maybe I'll get some of my other clients to come this way.
Next week, we will visit Mr. Valenzuela in the restaurant.
Yeah, so, see, I knew you guys were
His restaurant is not only a regular restaurant, they do shows like stand-up comedy in the restaurant. Because I have
Excuse me, everyone. Does everybody in here like this? What is your favorite disco song? That's good. Huh? Disco and who's your favorite artist? Prince is not your artist. You are all right with it. Who's your favorite? I got all without being that. Everybody like Donna Summer? I'm glad you raised your hand, Lawrence. Come over here and say. So, while I'm waiting for my next presenter to get done sounding down, we're going to make this a working us because we're running pressed on time right now. So, as soon as she's ready, we're ready. Okay? So, Renee, I got to go ahead and get started. Right? I got to ask permission from Renee because Renee always has a lot of people over at the table. So, without further ado, I'd like to continue. So thank you guys so much for coming out. Are you enjoying your time so far? Okay. So we got about another hour and 15 minutes. So we're gonna have to go pretty fast on this because we still got some presenters. What? Okay, but I'd like to bring up Miss Brenda Robinson to talk about funding. Now, sit here. You want a photo? Okay, my other boss says she wants a group photo first. Can I have that? Everybody, here's boss now. I'm handing over to Jackie Ray, who's going to help us with the group photo. So do what she says.
I am, but y'all.
I'm sure they wanted to have the picture before they got all full.
No, I can't now.
Where we going?
So if y'all can just stand up and kind of squeeze in like each other. And then the speakers will come towards the front.
We all come up front, please. And twice it has to be in the front, you can do it.
So right now y'all look like you know each other, but you don't look like
Y'all don't like each other. We ain't friends.
right?
Okay, I'm trying to get in here. I'm gonna hang out with my favorite student.
There we go. Okay, so I need, if y'all are over here,
Thank you all for being such good sports. All right, now let me start. Let's go. Let's go. I give everybody Mr. Robinson.
I'm Brittany Robinson with New American Funding. National Center for New American Funding, we're your regulators. We're in all 50 states. We do a lot of first-time, our office in England specializes in first-time homebuyer programs. And I have Rosa Amaya, who's on my team, and she's here. She's going to be part of the presentation, and I'll go the other part. Let me ask you this. For those who do not own a home, what has been the barrier to you getting a home? Let's have a hand talk. So let's talk about that. I want to talk about that. Say it again. So we're gonna talk about that. We're gonna talk about a few down payments. Was there an extra, okay. One second. So this is our team who has really been joining us on August 31st. Our team has been, we've worked together for many, many years. We have plenty of experience. I've been doing this over 30 years. And so this is our, so on the first page, it says first-time home buyers. We're going to talk about down payment assistance, and we're going to talk about grants, okay? So on this first page here, this talks about a first-time home buyer. If you're buying if you currently live in LA County, and you're purchasing in LA County, and we can go conventional, you may qualify for a grant. This is called the Green Line Grant. It's $35,000. You live in the property for 3 years, it's fully forgiven. Did everyone hear that? You have to pay it back? No. Okay. And then some people might say, well, you know what? I probably can't qualify for it because my income is too high. So you flip over here. And then for a household of 4 to qualify for this Green Line Grant, what is the maximum income for that household? Everyone's looking on the second page? So most people probably maybe qualify for that. A household member is 2 adults and 2 children who's ever going to live in that household. So a household of 4 making less than $199,000 may qualify for $35,000 that's fully forgiven. Isn't that nice? And there's other grants out there. There's other programs out there. The second program I'm going to talk about is we call it HOP 80 and now HOP 150. HOP stands for Home Ownership Program. Okay? And now this program, it goes by where the property is located. So the property has to qualify for HOP finance. And on one of the pages here, it lists the communities and it lists the household income. So many of the programs that go by who's going on the loan, by the household, how many people's going to be in the household, or some programs just go by who's on the loan. There's another program that's packaged through the California Finance Agency, and is anyone aware of they did the California Drink for All? those clients. In fact, I'm closing an email, we'll just close to you, where the county of, the state of California, the California Finance Agency is providing 20% of the down payment of $150,000. Did anyone here apply for that or recipient got a voucher? No? There's a lot of different programs, so using the excuse, well, I don't have the money, there's programs out there. What I highly encourage you to do, one, you should know what your credit looks like, then talk to a lender. A lender's gonna do a pre-qualifying. They're gonna ask for your bank statements, your tax returns, your W-2s, and let you know what program they qualify for. There's, even though these are programs here, there are other communities that have programs. Depending on where you're buying. If you're buying in Pomona has a program. There's programs all over, so don't let the money part be a hindrance. Most of these programs that provide the down payment assistance, you only as the buyer, you have to come in with a minimum of 1%. So if you're buying something for $600,000, how much money do you have to, minimum do you have to have? $6,000, and you get you in the house. If there's programs with this college program, I've done programs where the homeowner has gotten back all of their money. They moved it to their home, bought a home with zero money. That program, you can get all of your money back. So don't let that be an excuse. Meet with lenders. There's a lot of programs, there's a lot of free money. Lenders get in trouble when they do something wrong, like this green line grant is because of red line, because they wouldn't give us loans before. So that's out of that, they had to put so much money in and have to use it. So a lot of these programs are developed because of something that a lender maybe did wrong previously. So there are funds out there. And I said, for a New American, if you're not buying in Southern California here, we've been in all 50 states. We do reverse mortgages, we do we're direct lenders, FHA, VA, USDA, Fannie Mae, Freddie Mac, all of those, we do those programs. We're direct lenders, and the thing you're gonna get with our group, I'll be honest, I've been doing this over 30-some years, is that we care about it and we're gonna make sure we close the deal. Like people can say, oh, maybe qualify because I had a client call me yesterday. They're in escrow. A lender issued a DU approval. A DU approval really means that you looked at the income, you looked at the assets, and the information on this DU was not correct. So why did that lender take time and meet with that borrower? I'd rather spend a lot of time meeting with the client. I teach you what I look at. We look at, we pull your credit report. We look at, are you at 30% or more on your debts? How can we improve it? We even have a simulator that we can put in and tell what items we need to work on for your credit. So there's things out there that you can do, and so I just don't want the money factor being an obstacle. I just want to let you know there's funds out there, there's programs out there, take advantage of it. Meet with the lender, BMO and New American. Just, if you want a home, you can get a home. I really believe that. With that, I'm going to go ahead and have Rosa talk about a few more programs.
So Ms. Brenda talked about the different programs that are available that cover the county, the city, and also the grants. There's additional programs that you're looking to purchase in the city of LA, which covers over 80 cities. So we say city of LA, but their program was developed to help over 80 cities that are available, and that program offers up to $161,000 in assistance if you're a low to moderate income driver. So in the packet, you're gonna see the income limits for one individual. If you make under 93,000, if you change that for us, 93,300 a year, you could qualify for this assistance. It is a silent second one, which means it's not gonna include interest, but it does assist you to put as a down payment so that your mortgage payment could be more affordable to you. So this is what all these down payment programs do, help you make your mortgage more affordable. Instead of paying a $4,800 mortgage, maybe your payment might be $3,000 or less. Depending on what your qualification is, this program is going to provide you up to $161,000. Requirements for the program is that you have a 660 or higher credit score. At least all three applicants have to have the 660 or higher credit score to qualify for this program. You must purchase within the areas that we're designating for them as well. And the application submission is usually once a month for the LIFO program, and they're alternating because they also provide, if you're over this income limit, right now we're seeing incomes which are higher because people are getting raises or there are different fields that are paying much higher. They're like, I don't qualify for this program. There is a program out there for you as well. There is the MICO program that also offers up to $115,000 in assistance. So if you make in between $93,200 and $128,300, you could qualify for up to $115,000. Again, this is a down payment assistance silent second, does not accrue interest. You do have to pay this money back after 30 years or when you refinance your house with a cash out, or you sell the property, or the property is no longer your property residence. So that's when you pay that money back. Remember, I said after 30 years. If you refinance just to lower your interest rate, it will go ahead and do a deferment, refinance that same loan at 0 interest. They will allow small cash out, maybe to pay your refinance or your small cash out on that program, but you cannot take equity out of the property when doing a refinance. Small, maybe just to reduce your interest rate. It does have what's called share equity as well, which means if you buy today the property for $400,000 and you receive $161,000, they're going to divide that 161 by the sales price. You get a percentage, and your property in 30 years goes up to $650,000. That percentage is going to be divided by that new sales price, and that's how they're going to take a percentage of that share equity. So you pay back the 161 plus that percentage. Let's say the property doesn't accrue any equity because you're trying to sell it, you had a situation, you're not going to pay any equity on it. Okay, you're just going to pay back the amount that you received in assistance. We have been able to layer this program with 4 other assistants. We have layered with the Green Line, with the grant that we had in-house as well, and also with the Cow Home program. So that's 4 different programs that we have been able to put together with for one loan. Brenda has up to 5. I was lucky to be able to do up to 6 altogether, but it is possible to be able to purchase property with the different down payment programs that are available. Different cities have different assistance. We were last month in the city of Paramount, and they have an assistance program that offers up to $45,000 in assistance. Long Beach has an assistance program. Right now their list is closed, but they do come up with funds that are available. So what we have to do, and you have to do, just let us know, I'm looking to buy in this area, and we'll search to see what programs are available. Some of the nonprofits that we work with as well, they offer down payment assistance programs. They may have a Cow Home assistance that offers up to $100,000. That one may be also 0 interest, or maybe 3% zero interest, which means you're going to pay interest only once on the life of the loan. Linwood has $200,000. They still have some funds available right now. So they have up to $200,000, and I have been able to layer that with the we're paying on the remaining amount from the balance of the down payment assistance. It is possible, it's a lot of work. We're gonna ask you for your firstborn. Oh, you have a firstborn already, right? Yeah. Okay, yeah, you got it. We're not gonna ask you for your firstborn, but we will ask you for a lot of documentation, pay stubs, bank statements, tax returns. And as the time goes by, it's taking a little bit longer, we're gonna ask you for those documents again. So the first thing is to get pre-qualified, like Brenda mentioned, get pre-approved. Let's see how much you qualify for, what's within your budget, what can we do to get you through that process. And don't get discouraged. If you open that for a first time and it doesn't work out for A or B reason, it's not that, you're gonna find something better. So let's get you back out here. At the end, every city has different document assistance program. In the packet, the last program that we have in there is the City of Inglewood Initiative Program, which is offering up to $100,000 in assistance. That program is a grant. You must reside in the city of Inglewood, and or work in the city of Inglewood in order to take advantage of this program. So you can get up to $100,000 grant forgiven after 5 years. They forgive that grant, and you can also add $35,000 for remand assistance. So you can get up to $135,000 if you're a resident or work in the city of Inglewood and get advantage of that program. So again, just ask the questions, let us know what area you're looking to buy, and we're gonna go ahead and stack them up, layer them together as much as we can. One thing we have to keep in mind is we have to follow the strict rule of whatever program has the strictest rule. It's a must. So if one program says you have to come in with 1%, but the other one says 3%, we have to follow that requirement from the program. So I had a client that said, but you told me I was gonna have to put only 1%. I said, yes, because we're only gonna use that program. Now that we're having to use this other program, we have to follow the strictest rule. So things change. Sometimes you do get all your money back. Sometimes you have to put a little bit more back. My client that just knows we talked about maybe he's gonna have to come in with only $1,000 or more into the transaction. He received the free-for-all program, the one that's from the state, and he has to come in with $1,200. He's like, $200 more is nothing compared to everything that I'm receiving. There is also sometimes the California Association of Realtors will have grants, and we can layer that as well. So this far received the free-for-all program and the $5,000 grant that's forgiven right away. And those are programs that we want to take advantage of when they're available. So if I talk about it today, it might not be available at that time when you come in to apply for it, but we want to keep our eyes open with what's out there and we'll assist you with that. Any questions for Brenda? Yes.
Hi, Rosa, I'm Dina. So you mentioned nonprofits. Is for buyers, non-first-time homeowners, are those nonprofits available for us to look at, or do we have to go through a lender to know which nonprofits that we can call and ask what programs they have?
You can ask us, we'll give you those resources, and you can always go to the different nonprofits and research too. There's multiple organizations that have down payment assistance programs. So for I can tell you, maybe there's one program that's for non-first-time buyer that will assist you with that down payment assistance. But everyone else is going to be for first-time buyers, which means you must not have owned a home in the past 3 years. So that's what's considered a first-time buyer. You might have bought a house 10 years ago, you sold it, you're waiting on the right time, but you have not had any property taxes claimed on your tax returns. You're not on title, you're not paying any property taxes as well. So as long as you meet, or you're not on mortgage. So as long as you're meeting those, you're considered a first-time buyer again.
So which nonprofit?
So there's NHS, that's one of them that offers Los Angeles Neighborhood Housing Services. They offer the $35,000 grant. There's other programs available too. There's a program called the Shinoa program. It doesn't require the first-time buyer requirement as long as you're buying a primary home. So there's different programs available. There's a SHIELD program that I
Montebello Housing Development Corporation, they, go over the 80% of AMI. You hear us a lot talk about 80% of AMI, 120%, 150%. So everyone uses those different numbers to define their product.
So there's multiple organizations that have assistance. It's a matter of finding out if the funds are available at the time that you're purchasing. So you have to be ready to rock and roll or disco dance when you get ready to buy a house.
And that's what I've been with New America now a little over 11 years. And that's what I really like about our company. If there's a new down payment program out there, we're gonna have it available to offer to our clients. And the main thing is, when you're meeting with the New American funding loan officer, they're gonna close that loan. That's, I can say that, we're gonna close that loan. Where other times we'll talk to a little bit, and it can be a little iffy. What I normally do is, once I get a Google client, I send it to the underwriter, because it's the underwriter's signature that finally has to go on my Google. So I'll send it even while you're out shopping for a property. I'll send it to the underwriter to get that approval, so that way you can shop.
That's the best thing. Having a full pre-approval, a deed approval, it's the best thing that you can go out and look for house because you know what you qualify for. It's like shopping with a check in your pocket so that you know exactly. Because a lot of the times people will go out and look at homes, find and fall in love with something that's outside of their budget and be discouraged. We don't want that. We want to go out and prepare. This is what's within my budget. I'm gonna be able to find something, work with your agent, and if you don't have an agent, we work with several that we can refer you and you work with them. You have a question? My question was just what's your name? I didn't write it down. Oh, Rosa Maya. Rosa Maya? Yes. In the packet for information is on the first page. Yes. Thank you.
Just a quick question. I wanted to know if you guys, under this program, multi-family properties would qualify.
They will not qualify for the Green Line grant for multifamily. So normally, there are some programs that have some assistance, but only they dictate the rate and it's only conforming limits. So normally, if someone wants to buy a multifamily, I would suggest going maybe FHA, which you may have to sit down.
Thank you, everyone.
Y'all gotta know I love them. They came out to my July 11th workshop, and no disrespect to Ms. Brenda Robinson, who's awesome, but Ms. Rosa started talking about stuff for Paramount, and I'm a resident of Paramount. That was the first time I've been doing this that anybody ever thought about throwing some money at Paramount. So that's why they got invited back, because they gave us some money. BMO, they gave us some money. Y'all forever welcome. Workshops. And I think I paid for it. That's why we got the BMO check. One more time, BMO. Yes, I am a cornball. But it's okay because I have a girlfriend. I'm not alone. Okay, this is Brenda's information. Let's see if we can get that. I'm sorry. Thought we had something. It's in the packet. Okay, so I'm not going to let you have 5 minutes because we're going to be getting out of here, but I don't want to change the emotion of the room too much. But even though I'm an organizer of these workshops, I am a licensed life insurance and retirement strategist. And one of the things that encouraged me to get started in this business is, as I told you, sitting in church and hearing my pastor say he lost another member of the congregation and they were ill prepared. So how many times have you been driving your car and you stop at a red light and someone tries to get money from you for a funeral? How many times have you seen that? Okay, so I already know what the women would think because I've only had women come into my workshops. Yes, I am stabbing Jeff at the top. But I'd like to hear from the guys. I don't want you to say anything, but I want you to imagine something with me, right? So back in 2001, I was actually a day trader, right? I thought I was pretty good at it. I made a lot of money until I didn't. And y'all know what happened in 2001, right? And then once I recovered, 2008 came around and it happened to me again. Recession, yes. So the reason why I share that with you is because as a man that has children, I do believe that we were put on this earth to make sure that our children, because even though they're our children, they're really God's children. And we're there to represent Him and take care of our kids. And I believe to my core that I'm understanding in life and in death.
That's right.
Okay? So I want you to imagine this, man. You have children. And something happens to you on the job, out in theater, playing golf. I just lost one of my brothers playing golf. Yeah, and I want you to imagine you pass, and now your children are standing on the corner collecting money to bury you. Do you like that? I don't like that either. So when I lost all my money in 2001 and I lost my money in 2008, it terrified me. It literally put the fear of God in me, because now my charge to take care of my children was being a failure. And then I was introduced to life insurance. And that saved my life, because I really, really didn't know. I didn't know what to do. How am I going to take care of my kids? Right? So I'd like to talk about life insurance and a few things. But before I start talking about life insurance, I want you to understand why it's important, right? A lot of people don't understand. It's that thing that someone else gets paid for. Show of hands, life insurance is something that someone else gets paid for. Who believes that? We still got a couple. Do you think life insurance is just something else that someone else gets paid for? Because you die and someone else gets paid, right? That's true, but I want you to imagine this thought. How many times have you heard, well, I had to struggle, so my kids have to struggle too. Or I had to learn how to do this, so my kids have to learn how to do that too. That is the wrong thinking. Because if your family always has to start from zero, when will your family ever get out of the hole? Dr. Batchel's up there talking about sharing credit with you. You got an 850 FICO score. The second you give your child one of those credit cards, they've got an 850 FICO score. And the best thing in the world for you to do is give them that credit card with an 850 FICO score, because believe it or not, it saves you money. They don't have no job. Right? So you rather go ahead and let them, take advantage of your credit so you can save some money by helping your children. Okay? Do you believe in throwing your kids out of the house at 18? I just believe in not letting them come back. Because once you're gone, you're gone. But let them stay there as long as they can, because they're building their situation, and then when they're gone, right? But I want you to understand why this is important. It's a psychology. And the whole reason why we're doing these presentations is because the financial mindset is not something that we have in our households. When we're at the dinner table, can anybody who wants to volunteer? Actually, do we have dinner table? Yes. We sit at that. It's not just one dash and sitting in front of the couch. Right? Nowadays, men, do we really care what's on the table as long as there's something on the table? Right? But now the kids, I want macaroni, I want pizza. What? You better sit your buddy out and eat those black eyed peas, right? I ain't what was ever done, because that's what my mother prepared. Now we are victims of our own choices. We have too many of them. And since the pandemic, it made us lazy. So now we're lazy with all these extra choices. So you know what ends up happening? You end up having more money taken out of your financial coffers, and you don't even know what it's done, because it's death by 1,000 cuts. So let me tell you why that's significant, because if inflation is growing up on an average of 3%, and your income is not growing on an average of 3%, what's happening to your money situation? It's going down. Right now we have BMO Bank up in here, right? If you got your money in an account that's not keeping up with inflation, what's happening to your money? Right? So right now, if you were making $56,000 in 2027, to have that same amount of buying power 10 years from there is $75,000. Y'all can see that, but that's on page 29 in your book. That's why I printed it out for you. Right? These things are important because, does anybody know what compounding interest is? Tell me what compound, who wants to volunteer to tell me what compound interest is? I'll take it. No, I want the man to do it, because I don't get men to do it. I gotta have a man, whatever. Go ahead. Go ahead, Mr. Lee. Yes. Now, tell me when that's good and tell me when that's bad.
It's bad when it's working against you, like you say loan or.
Yes. Sorry, being low, my bad.
If you have to pay something off, it's bad because you already have to pay.
It's true.
When you say something good, when it's something good, it's when you're in the high peak, and it kind of that means more than it makes more money for you.
Okay, so that's pretty simple knowledge, right? So let me sting you for a second. Before, because I'm not even talking about doing this yet, but I want you to write and be in the right mindset why this is important. He just said that the bad way makes someone else more money, but yet we keep doing that. The good way that makes you money, you don't know anything about it. Why do you think you're in this class? Because I want you to know of the good way so you can have the money to be able to afford the lifestyle that you want, not the lifestyle that you can afford. Do I need to say that again? Because that's a significant statement. Why? Because what you heard is not how much money you have, it's how much you what? Keep. Right? So if you're spending most of your money on bills and all, like DoorDash and Instacart and what's the other one? Postmates and Uber Eats. Okay, thank you, Uber Eats. I'm sorry, but why would you pay $35 for someone to deliver you something when it's $5 if you go pick it up? I don't understand. So before I go too far, I want to talk to you about the 4 enemies to your money. Let me see if any of these are friends to you. Anybody know what taxes are? Yes. Does anybody know what risk is? Yes. What about inflation? Yes. Does everyone suffer from those 3? Yes. But guess which one all of us do? No. We have taxes, we deal with risk, we have to deal with inflation, but there's something that we do that exacerbates that. Does anybody know what it is? On page 29 of the book. Come on now, I gave it to you. Procrastination. And the longer you wait to pay that bill, what did Dr. God say? By month 13, what's going to happen to you? You're going to get that $22,000 more, right? So it's important that we don't trip. Taxes, risk, inflation, procrastination. Keep that in mind as we go forward, right? So I want to talk about basic introduction to investing. It's not like an investment class. I'm a life insurance strategist. I'm not going to talk to you about investment. But a lot of people want to understand how to do this. And the majority of the time is when they start their jobs. So how many of us have a 401k, 403b, 457, TSP, what? Do you match? Does your company match? Yes. If your company matches, if say they match 4%, how much are you putting in? 4%, right? Why not 10? Say that again, please. But why is 10 a bad idea? Why is matching, if they're matching 4, if you want to put in 10%, why is that a bad idea? Because 6% of your money is subject to market risk. Got what I'm saying? That 4% match is guaranteed money. Take that every chance you get. But if you're not prepared for that 6% that's being susceptible to market fluctuation, you could end up not having the retirement that you hope you had. You need to understand that before you start going forward. So in your book, page 33, is that? Because I don't have my glasses on, I'm still in the aisle. Why look like a nerd with my glasses on? Diving bag. Okay, so that's what they want to say. So you got the 401k, your IRAs, Roth IRAs, you guys heard of all that. 529 savings plans, you've heard about that? Great. Health savings plans, page 33, sir. Page 33. Trust me, I don't remember all this stuff, so I gotta write it all down. So, when you talk about step one, right? Step one, define your investment direction, right? First, determine how much you can stand to lose. This is essential, because if you can't stand to lose it, don't use it, right? How do I know? The reason why I can say this to you, I'm gonna get so much trouble. But I'm gonna say it. So what had happened was, 2001, my company went IPO. They gave us 500 friends and family shares, right? $16 a share was the selling price, but the expected opening price was going to be somewhere around $20. Easy bet, right? As soon as they offered me that money, I dropped that $8,000 check on it. We had an IPO. I had an instant several $1,000s. I think I made $30,000 that first day. My average selling price was $71 per share. I got super excited about that. So does anybody know what I did to get some more money? I didn't sell them. I did something else. I wanted to get more money so I could buy more shares. It's going up. I closed. What did I do? A loan. Who said loan? What kind of loan did I do? Well, I'm going to make this easy for you. Did you know that borrowing or using your credit card is a loan? So I took a loan with my credit card because I figured that 19.99% was okay if it's short term, if I'm making 50% returns on my money every week. Sound about right? Well, we shot all the way up to $91.50. Woo! It was the best idea ever until it went to over the counter stock at $1. What happened to that credit card bill?
It went up. It stayed right. It went down.
So I'm going to tell this. Why are you recording this? So at Black, this is Black. So at the time, I was not with my current girlfriend. I was with someone else that was 30 years ago, so that's my excuse. Because she's recording this, turn it off. Anywho, I'm a workaholic, consummate workaholic. So she says, hey, I want to go on vacation. You need to shut this down, right? Men, you know when the woman says shut it down, they mean it, right? So I shut this down. I turned everything off. I had all my stop orders in place, BMO. All my stop orders. The problem was, we were on vacation for 2 weeks. Ask me how long my stop orders were. They were 24-hour stop orders. Because I was so used to doing 24-hour stop orders, I didn't think to put a permanent stop order on. So I'm on vacation 2 weeks, having a great time. By the way, the shoe game is fine. Matter of fact, which one's the best, yo? Get out! It's a different shoe. So anyway, I go on vacation for 2 weeks. I didn't look at the stock market, Bloomberg, nothing. Meanwhile, the market crashed. I had invested $20,000 in one company. I had $50,000 leveraged in this account for the IPO, and I had a bunch of money in a couple other businesses. In a span of 1 week, 6-figure losses. I come back, and you know, girlfriend is expensive, I ain't gonna lie. So we go on vacation, spend all this money. I think I'm good because I'm making all this money hand over fist. I come back and find out I was broke. And we know how long it takes to recover from that. The game is called keep up, it's not catch up. Right. So I spent years catching up, only to get again in 2008. Another story. But I wanted to be able to share that with you. So I want you to understand what you can stand to lose. So you need to understand whether it's low risk, moderate risk, or high risk. You need to understand the difference between those. On page 32 of your book, if you select no risk, you need to understand even no risk has risk. Does anybody know that? Do you know what no risk is? What does no risk mean? You still gotta deal with inflation and market conditions, right? And potential loss or gains that you could have had if you would have invested a different way, right? So you gotta be able to understand that. So we want to talk about the 401ks. When you get ready to start your job or whatever your business is, you want to be able to put your money in something that's going to give you that's going to protect you from taxes for one, and having your money grow uninterrupted without having to worry about taxes every year is a great thing. Sorry, you know, right? I haven't given strategies. So we want to talk about that. Step 3. I'm sorry, we're going to talk about Roth options. So does anybody know what a Roth is? Does anyone know the difference between qualified money and unqualified money? Qualified money is pre-tax. That means the money is being able to grow without the IRS taxing it, but you don't have to pay. You don't have to pay those taxes later. You get that? Yeah. Roth accounts allow you to grow your money using after-tax money. Even the money is already been taxed. But here's the messed up part about it. You think you're not going to get taxed again if you want any appreciation from that money? Probably don't happen. Right? But every time you spend $1, you're getting taxed again, right? How many times does the dollar get taxed? Anybody know? 6. I think it's 7 times, right, BMO? 7 times? 7 times your dollar gets taxed. So when is your dollar actually get a chance to work for you? Right? So you want to talk about Roth options and tax-free access. 401k, if you're an employer officer of 401, get it. In 2026, the standard Roth 401k limit is $24,500. If you're getting older like me, you get an extra $11,500 $23 to catch up. This is important because you want to be able to have your nest egg built before you retire while you're still producing. Because after you're done producing, if all you have is Social Security that may or may not be there, that three-legged stool is going to be you balancing yourself. You understand? And all the other programs are similar, so I'm not going to go through those in the interest of time. Determine the investment amount and frequency. Because we don't have the screen, I want to be able to show you a financial calculator. It's very important. So can everybody go to page 34 for me, please? I want to give you an idea. If you're age 45 and 20 years before your retirement, and you're saving about $500 a month. Tony, I can't afford to pay $500 a month for a savings account. Does anybody feel that way? I don't really. But I mention this because if you can't afford it now, when can you? Because if you're producing now, when you're no longer producing, what's going to happen? Because everything is still going up. Are we still dealing with those tariffs right now?
Yes.
Yeah. I really love Chevy trucks until they hit me with tariffs. A $40,000 truck is now $60,000. Right? Come on, you killing me, right? So with this saving period is 20 years, starting at age 65, when you want to start saving, living on the funds for 20 years, at 0.68%. If you started out with a 3.2 inflation to have, what is that, to have $11,265, you would need to have saved $3.6 million. Your money needs to work a little bit harder for you. What do you think? So what happens if your money is doing 3.4%? It's still 2.7, but at least it's a lot less, right? If you go to page 34 further down, same scenario, you're 25 to 45 years, 40 years, you're saving $3,500, and you need about $4 million if you're only doing 6.68%, but at 3.4%, which is just inflation, you need only $2.9 million to have the same standard of living. Y'all see that on page 34? Okay, so the point being is, it's the same amount of money that you're saving, it's just what vehicle are you using to make sure your money is growing at a faster rate. This is very important. And because your dollar is being taxed 7 times, your dollar has to start working harder for you. Now, they didn't teach you this stuff in school because they don't want you to know it, because they want to continue taking advantage of your ignorance. That's what we're going to remedy today, right? Okay, so ask yourself, how old are you? How much money do you live on today? How long do you have to save, right? And how long will you need to live on those funds? You need to ask these questions because that'll help you determine how much money you need to save, right? And what is the current average rate of return for your money? So if you ask those first 4 questions on page 35, my favorite number, don't my football number, I never got it like that. Anyway, I'm sorry. Those first 4 questions, what is the current average rate of return? If the average rate of return that you're getting in your bank or your financial institution is not going to help you reach the goal that you set for yourself, you need to reconsider where your money is. Is everybody clear on that? So I'm sorry it's not on the screen, but I have the worksheet in the book. Please make sure you use the worksheet because it's going to help you figure out what your retirement number is or what your savings number is. Okay? Okay, so number 36. Yeah, y'all know what this, do y'all see that?
Yes.
You know what that is?
The chart.
It is a chart. But you know what that chart represents? That is you. So when you guys, when y'all registered for this event, it was a couple of questions on there, wasn't it? Right? How will taxes affect your income, financial literacy, home buying, first-time buyer programs, building, leveraging your own financial assets, understanding, maximizing retirement options. So the majority of y'all, I mean, it is what it is. Miss Brenda Robinson and Miss Rosie, y'all kind of stole the show here. 23.9% said they wouldn't come see y'all. I mean, all this work, they wouldn't come see y'all. That's all right, that's all right. Building and leveraging your financial assets, that's me. Okay, understanding and maximizing your retirement options at 19.4%. So protection was important to y'all, and this wasn't number 1 on the list. Yes, ma'am.
I don't have it on my page 36.
Page 36?
No.
Yeah, I gotta get you some special. All right? Because I didn't know what y'all were, I didn't know who showed up today, so I just didn't know. The point being is protection is important. So I want you to understand why life insurance is so important. Life insurance literally is the lifesaver to me. Okay? Life insurance is more than just making sure someone else gets paid. Right? Life insurance makes sure that you keep your money and let someone else take care of the bill after you expire. Is that okay? All right. So let's take a look at, I don't really want to talk about life insurance time. Which accounts can you borrow from? Because most people need to know that, especially because Ms. Robinson stole the show over here. Right? So can you borrow from a 401k plan?
Yes.
Page 37. Page 37.
Yes.
Okay, can you borrow from a 403b?
Yes.
Yes, but not all of them. Okay, can you borrow from a 457?
Yes.
If they allow it, right? What about non-governmental 457 plans? Yeah, I used to have a secret clearance. They're not going to thrift savings plans. Yep. Life insurance retirement plans. Absolutely. And that's what this is all about. So if you have what is called a cash value life insurance policy, you're kind of building your own bank if you're actually putting some money in the policy. Now, the great thing about a life insurance policy, does anybody know what a death benefit is? Death benefit is what is given to your beneficiary after you expire. Is that money taxed? Right? No, that money is not taxed. So, if that money is not taxed, you want to be able to, leave your family in a better financial standing, right? So it makes sense for you to be able to put a plan together to make sure your family is straight. So we have 2 types of life insurance. Does anybody know what a term policy is? What is a term?
You have a certain barrier, a certain guideline, and follow a certain capital.
It is. So term policies are usually limited in time, right? So up to 30, sometimes in special cases 35 years. But let me ask you a question. The term policy for me, I'm kind of like straddling the fence on it. If you're a college student, you don't have anybody help you take care of your bills, but you need some kind of financial protection, term makes sense, right? Let me ask you a question. When do you guys imagine you start getting sick? Later on in life, right? Throw an age out when you actually start having some health challenges. 30. Good Lord. Because I look. Oh, I don't even know he's talking. Anywho, so I want to be able to share that with you. So when you think about the importance of making sure that you get the right policy in place, I want you to imagine you're a 25-year-old and you want to be able to get some kind of protection. If you get a 30-year policy and you're 25, when does that policy expire? 55. Now you have no protection when you just now start getting problems. Does that make sense? When you're 55, is life insurance more or less expensive? Right? More expensive, a lot more. So it's even more difficult for you to get protection because now you start to have those health problems. So I want to be able to throw this idea at you. Not only do you want to make sure you get the right type of policy in terms of whether it's a term or a permanent, you want to make sure you have the right type of policy to make sure it actually protects you if something happens to you. Okay? So let me give you a story. This is a real life story. This happened to me 2 years ago. So I get a phone call from my aunt. She says, hey, Tony. I say, hey, Auntie. She says, oh, your uncle died. Yeah, so he dies. And this man, this man becomes green also. He's in his green kitchen, and he's in the kitchen preparing himself some breakfast after his wife went to work. So he's making himself some blood. The man is on nitroglycerin, so what is he eating for breakfast? Bacon. Were y'all there? So he's literally making himself some bacon, he's on nitroglycerin. Bruh, men in the room, we know everything, don't we? He did not know not to be eating bacon if you don't like nitroglycerin. Lion passed right there because he had a heart attack. She calls me up and she says, Tony, I need you to come because your uncle passed. I need you to come with this policy. I said, I'm on my way out. So when I walk through the door, she has a policy sitting on the table, kind of facing towards me when I walk through the door. And I walked through the door and I saw the policy sitting on the table and my head dropped. Does anybody know why my head dropped? Say again?
It expired.
It didn't expire, but that's an important thing. That's a good point. It was an accidental death policy.
Oh!
It's an accidental death policy. So does anybody know what accidental death policy is? No. You get paid if you got an accident. I think he was making bacon on purpose. Right? So he passed this, and now we have to pull together a collection to bury my uncle because he thought he was protected that whole time, and it was only a supplemental policy. So not only do you need to make sure you have a policy, you need to make sure you have some protection that specifically